too aggressive, even a quick butterfly spread, and try to get priced to, as I say with the butterfly spreads, is skate where the puck is going. So if we can, maybe 7,000-ish, 70-10 even, maybe spend a couple $100 and see if we can grab that this morning. So maybe a good looking trade for double ups this morning. All right, now we're up and running. Cool. Okay, so what else? Busy day yesterday. All right, opening bell. We'll get our highs and lows, watching the VIX at 16. So we'll get the high and low marked. Gapping a little bit higher. Let's see if we get some direction. 20. So we're opening up around 86. That's 35 points away. 35 points away on a plus minus 23. We read pre-market 27.85. What can I get for a, let's see. So if I can get over $1, I'm going to go a little bit wider here. 8 delta. See if I can match that. 30. Oh my gosh, dude. A 10 wide, really? No. Okay. Ugh. That's not a lot of premium. 69.30. Is that in the way? Man, we'd have to drop there. I'm going to try to get a buck today. I think we should at least try to go after it. So a safe dollar here. This is an 8 delta call side. I can get $1 on that 10 wide. Gosh, that's so bad. That's not even any better. Let's see if I can sneak $1. Now, I'd be risking 1 to make. I'm sorry, I'd be risking 9 to make 1. I'm gonna. Gosh, this is not my favorite risk profile, that's for sure. But let me see if I can get a buck on this thing. So we opened up, poked around 69.93. I'm getting a 7,000 to 70-10 zone. Let me see what that looks like here. Okay, so 70-10. See what it's probably the same price, but I'm gonna look at like a 10 wide here. So butterfly. So 380, 390. No thanks. See if we can snag a $1.50 out of this thing. Okay, pending order coming in for daily profit play. Let me take a look at this. So delta wise, 9 delta, 7 delta on the put side, 7 delta on the call side. Let's see if we can see this safely trading over $1. I'm going to try to go for $1.50. So here's DPP new trade. Today's the 3rd. Okay, we're still trading around 90 cents. I'd like to see if this will jump up like over $1, $20, $25 before I'd adjust the trade. Otherwise, I'll keep it at $1.50. Okay. So I'm going lower deltas. There's quite an open space here for today. Even though it's a small plus or minus on the day, we have the opening price, positive negative gamma pivot, and of course our 7,000 to 70-10 zone. I'd like to make that a little bit cheaper if possible. Let me see. What's that 7,000 handle? Like 70-10. Go 70-10. This one's not too bad for double ups, but it's going to be a heck of a lot cheaper if we don't hit highs today. Let's see. Let me just make sure we're not getting like a massive switch in gamma this morning. All right. Let me see. This isn't a bad trade here. I can get this one risking about $1.25. See if we can get $9 in this one. This would be a double up trade if I get filled. All right. 8.75 maybe. Risk $1.25. Filled. Okay, I've got a double up trade coming. Filled. Okay, so that was 8.75 credit. Okay, trades in. So this trade's 8.75 credit. I'm risking $1.25 max. If price comes up into the 7,000 handle, 7,000 to 705, 7,000 to 7010, that is a nice little profit trap zone. If it happens early in the day, so if it is a, chill day and price drifts a little bit higher, then that should be looking better for profit. If I see that trade paying like 50 to $100, I'm going to take some profit. I don't need to sit here and hold it all day. So hopefully that's a small risk, decent reward. See what happens there. I'll still wait and see. I'm looking at $1.50 on my daily profit play. It's 10 wide. It's a lower delta. I'm just trying to give ourselves a little bit more breathing room than just a plus minus 28. I want to give myself a little bit more. So I'm going like 35, 40 points. If we get some direction. Yep. So our high low on the day, let's see. Park that again. Come on, gamma. Hopefully, all I'm going to look at for this would be if we, test the open, maybe find the bounce, and then work our way back up. So we want to see price staying greater than 69.60 today. If we have an aggressive fall, we could get filled on our 10 wide and still be, well out of the money. It's in there for alerts, guy. Gary, sorry. Sounds so condescending. We're like, hey, guy, but that's literally a name. No, it's in there for alerts. Alerts and double ups. Members will get it. It should be out already. Okay, let me calculate the high and low for our day. Again, using the VIX box. Here's our center price. We're going about a 1% move. 290 credit on the Condor. Which one? So I did an iron fly on my double ups. I'm doing an iron condor on daily profit play. That is not trading for 290. No, that's not right. If I did the 70.25 by 35 and the 69.30 by 20, I mean, I'm going out to pretty low deltas here. So it's still trading for about $1. So I'm not sure how you're getting 290. So my mid price is $1. So I'm just going to let that marinate. This is now a 5 delta call. Put side is now bouncing up to about a 13 delta. I'm still going to keep it. Like those are initially like 8, 9 deltas. 30 is well below. I mean, it's below my 50% ATR. It's below my pivot point for the day. If this will update to like, let's say we get to a 120, 125 reading in the mid price, I might adjust this. I might. But I'm just going to try to hang on to this and see. I just don't want to take, if I take a dollar credit and I sense any defense, I'm essentially going to wash the day, which I'm trying not to. So I'd like to just at least try to get like $1, $20, $25. Then if I play defense, I can make it cheap. It's not daily profitable, William. That's for double ups. Yep. Yep. So daily profitability still have a pending order for $1.50. If I see this trading at $1.25, I might adjust it and take the credit at $1.20, $1.25. Okay. If price does absolutely nothing, if price just does this, look, if price goes up, price goes down a little bit, we should get filled at our daily profit play. If price is going to do this and just stay here, well, the only way I can really get a trade on that is if I tighten up my call side and my put side, go to higher deltas, which right now I'm not going to do. I'm just going to keep it single digit and stay out of the way for right now. The other trade is you can look at this kind of at the money and do a iron fly. It's probably $300 to $400 risk if we put it right at the money. So I go, let's say 80, call side 80, put side 85. Try to grab a little bit of profit here. That'd be 20 wide and 20 wide. So you risk 385. If price stays here all day, you can make over $1,000, right? But you have to sit on this trade for the day, and it's got to be very, very tight range bound. If we went 05, that'd be 25. This would be 25. I'm risking, $630 to make 1,300 if it stays in this range. Which, if you look at my chart, if we stayed range bound all day, this trade could pay very well. There's a, just over 2-to-1 on an iron fly for the day. But that requires price to not move. So is that trade great? It's okay. You're expecting price to basically be perfect all day. And if this price is, calm for 30 minutes, 1865 credit can easily turn to 1765, make $100. So it's hard to hang on to this thing for the full winter, but it's pretty easy to generally get like a 10, 15, 20% target if you like that trade. Okay. Thoughts on buying Disney? I'll take a look at Disney. I want to take a look at some earnings this morning with everybody as well. We got some earnings coming up. Tomorrow is going to be the meat of the week. We've got some Google, some Amazon this week. All right. High, low. Not yet. My VIX box is showing around a 70.45 and 6,900. I'll do the exact measurement here. We had a slight gap up, and we've got a VIX that is going up just a tiny bit. So most accurate VIX here. And again, the VIX might go higher unless we're going to see prices go up. If price goes up, then the VIX should come back down to the low 16s. So I'll take this little flare up here, 16.5. So 1.03% move. We gap up. Look at 1.03%. 70.57. We're looking at a 16, but a 16.5 VIX. And again, this could change. Oh my gosh, you freaking. All right, this thing better bounce off of, it better bounce off of 60, or else I'm going to pull the plug on that double ups, because that's making it harder and harder to get back to 7,000. So I want to see this thing bounce hard. If it doesn't, I'm probably going to bail on the double up and get out fast without taking a big loss. But look at the VIX. If this is any tell for what the day is doing. Anyway, we'll just hang in there. VIX is flared up to about 16.6. So 1.04. So we had yesterday's close. 1.04. We shouldn't see a drop today more than about 69.03. Again, that's with the VIX at 16.6 VIX. So that might have to be a moving target. If price is gonna, if price on the VIX goes higher, we'd have to keep adjusting those lows. All right. So say 1.04. So open here, 1.04, 70.58. And bottom, take your previous day's close, 1.04, 69.04. Okay. So there's my high low of the day. Again, we gotta watch the VIX. If the VIX stays contained here, that's good. I'm going to set a chart along. I'll keep it at 17. I mean, that's pretty noticeable. If we rip up here to 17 on the VIX, then we're probably seeing some down pressure on the day. Our daily profit play is still trading at $1 right now, even with a bit of direction. Not a ton, but market's down about, I don't know, 9 points, 10 points. TML question on waterfall income. You can ask it here in class, or you can send me an email, chrispulverpub@gmail.com. Set that to everybody. So send me an email if you want on waterfall income. Okay. Still looking at daily profit play, still not filled. Again, if this is offering us like 125, 130, 150 even, obviously I want to get filled at 150. That's not bad. Pretty low deltas. Can we get back to a fresh high on the day? Let's see what the bulls are made of. Anything happening in our gamma? I'm not getting a ton of 0DT filling up on the red side. 7,000 seems gettable. Come on, man. I kind of like it when this is you see a large level here and a large level here. Like to see if price will just kind of hold right now and kind of make its way up. So see if that double up offers some profits. Waterfall and daily income, big difference from Riz's question. Waterfall income is a swing trade. So we're looking at 50, 60, 90 days out. The ones we have now are even over 100 days. I'm trading the indexes where, we've got 10, 15% room for error, still pulling in income, huge profit traps. So I have a, strategy 1, strategy 2 for waterfall. No, it's not late at all. I bet you can still take the trade no problem at 50 cents. Yeah, I bet the trade's still valid. Okay, so let me get this organized here. 1, 2, 3, 4. This is going to be, that's a double up fly. So 875. See if we can get some direction, push up into those gammas at 7,000. If this one can turn, 50 to $100, I'd be pretty happy with that. High and low of the day. So based on the VIX calculation there, Dave, I'm looking at the high around 70.58, low around 69.04. Okay. Now, again, that's based on the VIX at a high around 16.6. That was just a spike up this morning. So if the VIX will retreat, right? If this VIX goes down, then yeah, we're probably going to see some directional move to the upside. But if the VIX breaks the highs, then we've got to be a little more aware that this market may, offer up some lows. But hopefully it's just going to be a quiet day, and I'd like to get us filled on something daily profit play. Any direction yet? Nope. Now trading for 75 cents. Son of a biscuit. In days like this, I want to get filled on something, but I'm not going to settle for a $9 risk on a $1 credit when the market maker, the expected move is like 27 points. We moved 65 points yesterday, 66 points yesterday. So when it says like plus 28, I'm like, really? Is that all it's going to move today? And maybe it does, but here's a good way to, this is a good way to kind of get your charts prepped for the day. So we had the open. So if the market's going to be efficient today, we have the opening price, and we'll go plus about 27.85. So I'll take this gap up here, 27.85 there. So that would be market maker efficiency if we hit that high. Okay, take your previous day's close, go down your 27.85, and that would be your market maker efficiency. So if the market stays within this zone from that top line to this bottom line, then this is a perfectly efficient day. If the market breaks higher, goes higher, okay. Breaks lower, goes lower, okay. I don't know what's going to happen, but that is a pretty small move. So we'll have to wait and see. Dave says got filled low side for today, 55 by 40. So you went up a little bit higher on the put side. I gotcha. Yeah, and that's not bad. I mean, what was that delta, David? Jolts at 10. Is that 10 o'clock for Jolts? Okay, good stuff. Let's check the initial heat map. 52 advancing, almost 53 advancing. Software getting smoked. Intel, Adobe, CRM. Like, I think these are companies that I think are all under pressure, like sustainable pressure. These are not companies that I want to be in. Not Intel, sorry, INTU. Anything software related, like CRM. In fact, there's an inverse trade that I've been watching all year. It's just trading ExxonMobil versus Salesforce. So if you go ExxonMobil versus CRM, look at this chart. Okay. This essentially is my theme for the year. I want to own physical AI. So the energy side, the build out side, this is crushing software right now. So, XLE, XOM, XLB, XLI, those are all pretty good sectors. Nice breakout. I mean, I have some shares of Exxon. Not a bad play to get some price appreciation with a 3% yield. So, I mean, I bought it here with a $100 handle, and it's up $40 a share. It's not bad. I mean, at this point, it's like, what do I do? Well, I do some ratio spreads and sell some puts. And if we get a pullback to like 125, 120, I'll buy some more. So now that it's kind of up in this breakout zone, I don't buy the top. It's like, let's get a consolidation and another push higher. Let's get a pullback and use past resistance to become support. See if we can get a good entry here. Okay. All right. Jolt to 10. All right, fine. Any other major news this week? So we had manufacturing PMI numbers came up yesterday. Cash rate held by Australia. Fed speakers on the prowl today. Jolts. I'm not seeing it on the calendar. Low impact across the board. I'm not seeing jolts at all. I see ADP tomorrow. Services PMI tomorrow. Bank of England rates holding. ECB rates holding. Friday. No non-farm. Did I read yesterday? I would say so. We have a partial shutdown. I believe that jobs data might be delayed again. So do we not have non-farm this week? All right, so we got another freaking partial shutdown. Sweet. Are they tentative for next Friday? Nope. They're just going to get delayed again. Cool. It's fun. We have no news to trade, huh? Well, that kind of puts a wrench in news releases. Other than PMI numbers this week, which manufacturing PMI came in higher, but I'm not seeing jolts this morning. Yep. Anyway, Chevron, ExxonMobil, they're looking decent. I think there's earnings this week on, is it Shell and BP have earnings this week? ConocoPhillips on Thursday before the open. Shell. So I want to take a look. I want to take a look at some of these for some earnings opportunities. Today after the market closes, AMD. I mean that's in the chip space. Uber. I don't know if they're going to be talking robo taxis, if that's the thing, if that's going to put Uber drivers out of work, or if the company itself is like, yeah, we'll just have robo taxis. We'll have automated drivers. Now, again, it's way too early. That's not happening right now. But if it starts to roll out in certain select markets and cities, your drivers would be pretty pissed if they're getting replaced. But the company itself is probably going to make some money. You know, they buy a fleet, they deploy them. I don't know. So we'll see. Eli Lilly, it's an expensive stock. I wish it would split because I'd like to participate. Um, all I've really seen is, I mean, they're GLPs, they're what is it, mononucleotides, and your Ozempics instead of the injection. They're starting to look at trials for the pill form. That's probably going to be more widely adopted, and a price point. Pill form is like $1,300 now. It's down to like 150 a dose. Anyway, if that is going to be rolled out from Eli Lilly as an offer, that could be huge for them. Okay, nice, Steve. You got filled at 885. That's fine. I'm going to keep an eye on it. I mean, obviously, we need price to be working its way up towards 7,000 today for that trade to work out. I've ever ridden a drive. I mean, no, not. I mean, not the newer ones, but I definitely would. I think the craziest thing would be if you buy a Tesla and it just shows up at your house. No driver, just leaves the showroom, goes to your house. Like that's kind of crazy. It's kind of cool, kind of crazy. All right, so I maxed out here. So 125 is my max risk. I'm down $60 right now. Let's see. Do we have something in maybe like the 69, 40, 30 zone? Let me see if I can get a cheap trade here. 69.50. So I went 10 wide. This one's pretty cheap. So 50 and 60. Man, I kind of want to go here. So that's 15 wide. That's risking a buck 20. 40. Okay, come on. All right, I'm adding another trade for double up to try to get a couple of pin spots. I'll check on our daily profit play. That is a 45 and 60. All right, there's our buck 50 filled on daily profit play. So trade got filled at a $1.50. Initially, that was a pretty low delta. So it's a 30 by 20, which right now is trading for a pretty high delta. We've got a 50% ATR on 69.40. Gamma's lighting up a little bit. This profile's totally changed this morning. So do we, hold at 50, hold at 40, bounce back up off the lows here? I'm probably gonna have to put on some defense just to feel a little bit better about the trade. We got filled for a $1.50, so I want to have some defense below. This should be pretty cheap defense. So if I go iron fly, or not iron fly, but a put fly, try this one. This should be out of the money. This cost me 30. Let's see if we can get in here for like 40 cents. I'm looking at some defense here. I'll sacrifice up to 50 cents in this thing if I can. Trying to put in a butterfly at 50 cents. Come on. 55 cents. $69. So I can go 95, 15 wide. That's okay. I'm looking for something to hit see if we can get here for like 50 cents. Come on. All right, I got a defense trade in coming in daily profit play. Look, I don't like throwing in defense, but I think we need it. If this market's not going to cooperate and we're going to move past that 28-point move on the day, defense coming in. And that would be up to 14.45 potential max profit. William, if you've got the same thing I do, man, there's no reason for that to stop at 70.20. We should have strikes on the 0 day all the way up to, I've got 9,000 strikes for the February 3rd. Are you using the desktop platform? Like I'm using desktop or web? You can see my strikes here. They're way up here. I don't know, turn off the app and turn it back on, or shut it down, turn it back on. There's no reason for those strikes, especially 0 day. You should have strikes that are, well up to 7,200. Okay, let me do some organization here. 80, 95, and 10. Those are all puts. 80, 95, and 10. So this is DPP defense. 69, 20, 30 by 25 and 35. And this is a double up. All right. So double up. Daily profit play with some defense. Let's see what happens. So what does this look like in the options chain? Right now, I have a double up trade that's pinned to the 7,000 area. Those are obviously like way low deltas right now. Price would have to make a pretty outstanding move to the upside, which is possible. I have my, what's this? 45 by 50. This is an iron fly for my double ups. So if price hangs out around 50 today, comes back up to 7,000 today, those are big reward, low risk. And then my daily profit play is the 30, 20, and I've got some defense below that. So if we end up dropping towards like 6,900, we'd have a chance to play some defense and wash some of the risk. Okay, let's just get a feel for the market. I mean, that's what we have to do is don't freak out here. Like the market opened. Market opened. We had a plus minus 28 on the day. So from here, look at the lines we drew. Okay, is the market caring about this low? Based on the previous day's close, that's our plus minus right there. Now, granted, the VIX is also up to 17 plus. Okay, so we don't have a, our 16.6 VIX has been blown through. Now we've got a VIX up here spiking up to 1737. We've got to adjust that low. So we got 1.08, almost 1.09 for the potential bottom today. Potentially. So 1.08, 1.09. If we wanted to call the bottom today, it's not that much. It's like, okay, we're at 1.09. We're talking like the 6,900. That VIX is 17 point what? Spike up to 17.36. Yep. So 17.3 there. So a tiny little adjustment to the bottom today. If this is where we bounce, this is a market maker low, this is where we bounce, right? If it creeps lower, well, I do have a profit trap in here with that 68.95. That's defense, right? That's defense. It may not be enough to offset all of my risk, but that would be hopefully enough to offset some of it. So daily profit play down $75. Defense, we'll see if we get something that offers up maybe a few $100. Maybe we can just offset the risk if we don't like it. I'm still trying to bank on market efficiency in some way, shape, or form. Okay. We closed yesterday at 75. We sold at 69.30. Right. So we're the plus or minus 28 points and we're at 40, 45 points away. But you take a plus minus 28 times 2, it's like, could we have a 2 standard deviation move today? Sure. There's 56 points. All that's very possible. So, we'll do our best. XSP today, nice Dean. Deep insured not putting a close. I mean, no. If you don't like the daily profit lane, get out. You're down $100. You don't like it, get out. I'm not managing the trade that way. I'm going to try to give this chance. I'm going to give the market a chance to be efficient on the day. Right? Even if we have the market down, if it's down for the day, comes back up above this black line, guess what? Plus minus still respected. We just had a little bit more volatility. It's funny how, look at this headline. Palantir soars, edges higher. Not today, it's not. SPY's down 0.47, SPX down almost 0.5, Q's down over 1%. Dow is flat, Russell is up 0.41. It's like we're getting that like weird rotation again. It's like small caps leading the way. Dollar flat, gold up 5.5%, silver up 10% today. Bitcoin off the lows a little bit, still down 1.7%. Check the heat map. We're at 61.5% of stocks advancing. Really? Interesting. It doesn't feel like it. Look at what's down, though. NVIDIA, Microsoft, Oracle, Broadcom. That's big market cap right there. So if those are down, it will drag things lower. Palantir is apparently ripping. Palantir's up 5.5% today. That's post earnings. But look at what it's doing. So up, but quickly fading. Earnings from yesterday. Let's take a look at these. VIX is 1709. Yep. So I already measured the spike here. We got a spike at 1737. I'll move this right here. I'll set another one at 18 just to kind of keep tabs on the VIX today. Okay. Very difficult days to trade is when the VIX is intraday spiking right in front of our very eyes. That is a hard one to, call the bottom. Today, if this is it, is a little flare up in the VIX and it fades and it's no higher. So if we're less than, 17.4, then I think the market's going to be contained. But if the VIX spikes up and we're, breaking 18, we'll have to adjust and we'll probably see some pain to the downside. Okay. So we have to watch the VIX today. Got a backup plan to have some defense. Now, look, according to my gamma levels, should we see price going below 69.30 today and staying there? No, we really shouldn't. Okay. Could it happen? Of course. Anything can happen. But these levels are there for a reason. We're dripping into negative gamma. That's fine. But as far as the close on the day, I would hope that we can stay above 69.30, which means our daily profit play should still carve out a winner. If we end up breaking 69.30 and coming down to the 69.10, 6900, well, I've got a 15 wide profit trap there. Cost us 50 cents. I mean, we can hopefully offset a decent amount of our risk. Not saying all of it, but we'll see how this plays out. Hopefully, we're going to get a stall and bounce. The market maker move has already been hit. Okay, it's already been hit. Let's go from the previous day's close. We had basically 28 on the day was expected. Market's already moved 33 points. So we're showing inefficiency today so far. So my level, there is the market efficiency. Our levels we're selling is the 69.30. Make this one a 4. I mean, that's really the most important one. The top one here at 70.25 or whatever, that's pretty much pointless at this point. 70.25. I mean, the odds of that getting hit today are pretty slim. 70.25 there. So market efficiency, this line, and our levels, so DPP is here. And then I have a profit trap that's running from 10 down to about 80. So this is a profit trap in here in case things get a little nastier. All right. So, I mean, this is the market. This is 0DT. Prices are sensitive. We've done the math. We're watching the VIX. As long as we're not going to spike higher. I mean, I'm telling you, the challenge of the day is, are we going to go higher on the VIX? We've already measured this to put us around a low of around 6,900. If we start seeing the VIX go higher, that low isn't necessarily safe. Okay. Now, it doesn't mean we stay there, but this market for the day, it's like, well, look at our levels. We have 100% ATR right here, around 69.10, 69.05. That's also one of the lowest level gamma readings that I have on the day. We shouldn't see prices going below 6,900 today. In fact, I'd like to see price. I'd love to see price just kind of hang out in here. 69.40, okay. Come back to this 69.60, hang out for the day. There's your high, there's your low, there's where we settle. Market still maintains some level of efficiency. I mean, that's what we have to plan our day like, okay, where can the market stay efficient? It's not like everybody panic because the market's pushing right below that expected move. The day is just getting started. We've been in this for 40 minutes today. So price just has to do its thing. Hopefully, we're not going to see too much damage down below, 69.20 or so. Obviously, at 30, that's where things start to get a little nastier for us in daily profit play, but that's why we have a profit trap down here, just in case. Again, watching the VIX. This will be a challenging day if the VIX is going to continue to spike up and go, 1 point at a time. Like 17 to 18 to 19, that's a big move on the day. You're trying to call a bottom. 17.6 is 1.1%. It's actually 17.4. Let's go. Let's just say we rip up here to like 19. Well, a 19 VIX, big difference. Now we're talking 1.19%. That's a very different low. Did I get filled? I did. The defense butterfly was filled at 55 cents. 55 cents. So I'm risking 55 to make 14.45. But the idea there is, for my $1.50, if we win the day, like if we win daily profit play, let me get this chart up here. If we win the day for daily profit play, so let's say that price is going to be closing, or later in the day it's up here and it's greater than this line and it's also less than this line. Well, that's worth $1.50, correct? If this is worthless, I'm sacrificing 55 cents. So what do I make on the day? 95 bucks on the day. That's okay. Do I like to do this? Do I like to play defense like this? No, never. I don't want to have to play defense. Okay. But I will. So we are managing risk. And if we can win the day, let's win the day. Right. And again, I typically always kind of bank on the market's ability to be efficient because that's what happens way more than it doesn't. But let's keep an eye on it. And that's all we can do. So if we're less than this level, greater than this level, that's a winner. If we're hanging out around like 50 or so for double ups, that's a winner. If we come roaring back here to 7,000, that's a potential winner. If we come down to 6,900, that's a big profit trap, maybe some defense. So maybe I take heat and a loss on daily profit play, but I can wash most of it with a butterfly spread. Okay. And I don't, that's kind of it. It's like now I'm watching, now I'm monitoring. What makes this day harder would be if the VIX keeps going higher. If we see the VIX at 1920, well, then I'm probably going to see prices break into 6,900 handle. We can have another one of those really annoying, like, wow, the market sold off by 1.5% today, 2% today. Those are tough days. But we will do our best. I'm hoping that like a plus 27 on the day, 28 on the day is not going to go too much further than already it's moved almost 40 points. So we've already seen a 40-point move. I don't want to see too much more than that. And if it happens, I mean, obviously I can't control it. I'm just saying we've got a plan. Okay. All right. I'd like to take a look at some potential earnings plays. So I know for after hours today, let me bring up some option slam here. Earnings plays. So today after market, we have AMD, Super Micro or SMCI, Chipotle. Before open tomorrow, we have Uber, Eli Lilly, Novo Nordisk. Let's take a look at some of these. I'm just going to look at the chart first. Then if I like something technically, then I might take a look at the option chain and the earnings expectations. So AMD. Let's check some. Okay. Where is my second? Okay. AMD price to earnings is outrageous. Cash flow 325. Earnings. I mean, what I'd see technically on AMD, I wouldn't want to call the top. I'd almost prefer to see price, somewhere in here. If we get a pullback, that's a spot I would consider maybe going long for a defined risk trade. I have a project options edge here that was closed out for profit. That was a pretty safe trade there, obviously, like using the April lows. Let's see. Let's look at the expected move. So AMD, average earnings move about 7.26%. So that's about a $17.80 move expected. Broker showing this. AMD, broker showing a $19 move. So expect to move about 19. Average moves about 17. Interesting. One thing that could be kind of cheap would be a calendar spread. If we get a tighter move, I know it's today after hours. I mean, it could be very cheap. Let's see what AMD looks like if I did a calendar. So if I go Friday to Friday, so I would sell the 245 and then buy the 245. Let's see what that looks like. I want to see where the break evens are. So build a calendar spread. So AMD. What the heck? So go 2.6, 213. There we go. And 245. There. So if AMD, so I'm showing a debit. It's a little pricier than I want it to be. It's like 240 debit. That'd be my max risk. I mean, if we get a break even price, 222. Check the technicals here. 222. I mean, yeah. All right. I don't like that setup. That's like 220. It's like we got to stay here to about 272. I think that's a little tight. All right. Let's try something else. Iron Fly. Maybe try this. 42 to 70. I'll try 30 wide, I guess. 245 to 25. So that's 30. 30. Nope. A little pricey. Yeah, that sucks. This one to me is just probably better to wait. I mean, I kind of want to see where price goes. Obviously, it gaps up. Like, that's not the trade I want. If we came down here, maybe taking a stab at a gap fill. I wouldn't mind that trade. Let's see. Yeah, I'm not going to play this one. A little picky. Lots of put buying. Interesting. Yeah, I mean, that obviously those flows and those sweeps could be downside pressure. Where could I see it coming to? Probably that area. Coming back to 200, maybe gap filling around this 180 zone. One thing we could look at, maybe if it goes down, this is a little risky, but All right, we're breaking. VIX is up to 1738. We got a fresh high in the VIX again. Okay. Things getting more interesting. $69.30. We need to see one of those classic like VIX wicks and it retreats. If it's going to be steadily higher today, then this is going to be probably a push down to 6,900. All right, let me look at one more thing for AMD. Could I do a, let's see what a broken wing butterfly looks like. I'm looking at something risk defined. Let's go AMD, just the 6th. If we're expecting some downside pressure, maybe the like 65 or 70 zone. What's the expected move in the upside? I'm showing upwards of like 65. If I do buy, sell, buy, that credit is garbage. If this was like 50 cents, 75 cents, I might take the trade, but not for 40 cents. That's too much risk. If we're wrong to the upside, it's a $200 risk. We got a profit trap if price is going to hang out at 62. I mean, if I want to be really specific, I can just set the number that I want. So here's a 266. If I do a 270 by 7250, let's see. Question is, do we like this trade? You want to call the top on AMD? Probably not. You know, if this gets a good move from earnings, like it's gonna blow through those highs. But I could see the put premiums coming in on Lance's scanner, and maybe we push down here. But to get that trade, I mean, to me, the better trade is not buying puts, but rather if you want to go down, like buy the 45, sell the 240, 250, pretty much get a 1-to-1 if you're right on direction. But it's all or nothing. Like if you're right, you get roughly a 100% return. I'm looking at if the market does go up a little bit. I don't know. Honestly, I'm sitting here like wasting time in this stock where it's like, I don't really like it. If it comes back to feel like 175, way more interested. I'm going to move on. Clearly, if the calendar spread doesn't look good, then I'm just trying to, force a trade, which is not the thing. Let's go Chipotle. Chipotle at 39. I mean, I'd like to think these lows are pretty solid at 29. This one might be a pretty decent trade. Here's lows back in 2022 after the split, $25. So I already have some shares of Chipotle after they split. $34. I mean, should they stay above? I mean, if we can get something that looks decent for 25, this might be a good looking trade. This might be Project Options Edge. Let's see if we can get like a 30 by 2750. So it's a 250 trap, just under $100 of income. So there's $100. Would I be willing to own shares at 27.50 or less? So 30 minus 250 minus $1.15. Would I like to own shares of Chipotle at 26.35? And if I owned it, would I repair it? So 26.35 gets me back down towards these 2022 bear market lows. I mean, have we given ourselves a bullish pattern yet? No. If this is a correction, this is a correction. I mean, it may be trying to give us a bottoming pattern, but it also might be, retesting. I still think that low's pretty decent. We'd be below that low. That's out to January. I was hoping I could get a little bit more premium for that. So $1.16. What is a little bit further out? June of next year? Ugh. I don't love that much. 27. Let's go 30 by 27. Let's see. Let me check and see if this account has some CMG. Okay. I'm looking to see. So some accounts that don't have CMG, I think I'm going to take this trade. All right. So that account just has CMG. That's repairing. So these 1, 2, 3, 4. I think this is a pretty good looking trade. So if I'm willing to own it, it's a 30 by 27.50. So 27.50 minus 250 minus 235. I'd own shares at 22.65. That to me is fairly safe. I'm going to see if I can take this trade for 235 credit. This is bigger picture stuff, out of the noise of earnings. Let's see. Pending order. 235. Try 230. Try to play around with the numbers a little bit. All right. I'm not taking less than $2 on this thing. Now it's $1.41 mid. Wow, that's a big difference. 210. 205. Final offer, $2. I might as well do 4, 3, 2, 1. 204. Okay, final offer at $2. If not, pass. Pass. No fills. Okay, no big deal. Chipotle for just earnings. I'm going to pass. Going into Uber. Uber. Quick top down here. I mean, Snowflake looks good. I do think this company has potential to be way more profitable. 10 times earnings. Are you kidding me? That's freaking cheap. Wow. Wow. Okay. I don't have any Uber exposure right now. I think we took profit on that last year. Uber, nothing. Okay, so earnings play. I'm going to use this area. I'm just going to use this like $60 area again. See if we get something decent on Uber. This might be Project Options Edge. $60. I mean, this is pretty decent. I mean, could I own it at $50 or lower? Let's find out. 52 by 50. So yes, I can. I could own it here as well. 250 bonus trap plus $1.60. This isn't a bad trade. Could I go a little bit further on this profit trap? 10 wide profit trap. Own 200 shares of Uber. Let me do the math on that. So I'd have a $1,000 profit trap. So it'd be 50 with the assignment price. That would be 200 shares. So I'd split that by 500. So minus 5. And then minus 43 cents. I'd own shares of Uber at 44.57. That's not a big income play. That's only 80, $85 or so. That's a little bit better. This one's okay. Let's do the math. So 50 minus 250 minus $1.05. So I'd own the shares at 46.45. I get $200 income. I think that's pretty safe. This is good. I think this is a good trade for margin account. I'm going to take this trade here. Hopefully we get over $2. I'm going to try 210. Well, shoot, that was easy. 225 credit just got filled. Okay, I'm going to try for a little bit more then. 230 credit. 230 credit not taking. Let's try the 225 again. Okay, getting filled at 226. Not bad, not bad. 9. Okay. New trade for Project Options Edge. Not a bad one to have there. Give this one to margins. Okay, I'm getting filled for 225, 226, even 230 on this one. Not bad. Okay. Got a new trade on Project Options Edge filled. This will be trade number 103. So 225 to 230 credit. This is a ratio spread. They could put on Uber to own Uber. 200 shares if price is less than 50. So the math on that would be 46.45. Anything less than 25 debit, I'll close for win. So I get filled for 225 and it's traded for 25 cents or less. It's a $200 winner. I'll just take the profit. So that could be way below expiration. Okay. Probability of profit on the trade. Looking about a 90% chance of profit. And assignment risk would be around the like 9%. Okay. Trade is in. Okay. Okay, price hanging out at 69.40 SPX. I'm spot checking this. Let's go. Okay, trades in. Put this in our tracker. Number 103. Combo ratio plus naked put. If you don't want the assignment, then anything where if the $50 puts are trading for like 350 or greater, then you can take a small couple $100 loss in the trade. But I wouldn't mind owning the shares. I think if any company has a chance to go into the future with autonomous vehicles and whatnot, Uber should be that company. I would think. I mean, people refer to all ride sharing as Uber, even though there's multiple companies that do it. Nice fill there, John. Good stuff. Amazon earnings, TTWO, huge flush right before earnings. Okay. Yeah, we'll take a look. Take a look. All right. So some margin account love there on some Uber. I feel better versus trading the noise of earnings, unless I get something kind of magical on the expected move. So Uber is expecting to see for this week. Earnings is tomorrow morning. Only a 544 mover. So what's 544 on the current price? 544 divided by 78.30. Market expects about a 6.9% move. Let's call it 7. Average earnings move 7.18. So calendar wise, I mean, let's see. Wednesday, Thursday, Friday. So we'd have 3 days to manage this trade. I see these getting up to like 10, 9 and 10%. So a calendar spread doesn't look good on that one. You want that like, less than expected move in a vol crush. So I'm just going to hold off and keep that trade. So this can go down to about $46. So a 55 by 50. So 225 credit. Okay. I'm fine with that. Less noise. Next up, Eli Lilly. Probably a high flyer. I'd love a chance to buy a dip in this thing, even if it was just bull call spreads. I mean, look at your major fibs. 236, 30% GAN, 38%, 50%. Anything that comes back to, I mean, I guess 900 or less. Look for like a 1-to-1. So here's LLY. Yeah, I mean, it's $1,000 stock. It's like you got to pick your battles. If we get some pullbacks, bull call spreads would be great, but most likely strikes and spreads are going to be pretty wide. It's probably going to be like a minimum, $250 to $500 risk. We've got 5 wide spreads. Let's see. Let's see if it. I'm curious on like a calendar spread. I mean, it might be expensive, but let's go Eli Lilly. So 9.32 on average. See what the broker has for it today for the Friday expiration. 62 bucks. So broker's expecting about a 6% move. Average move is 9. Wow. That's a big difference. It's a crazy difference. It's probably going to be pricey. So broker expecting about 60 bucks. And we're looking at average move 9%. 1042. So, I mean, average move is around $90. 97. Wow. So what would it be if we went to the expected move here for a bull call and here for a bear put? So for 70 cents. Wow. So I can, well, if that, I was going to say, if it fills. So for 100 bucks, I guess it's more like 110 now. If we get a big fat move on Eli Lilly, we could turn $1.10 into, 400 bucks. If it's greater than less than 980 or greater than 1105. I think the only problem is we are sitting here kind of stuck in this range. So unless earnings is gonna help us break out, what's this top? Top around 1134. So if we hit the highs, this one pays. Lows at 1,000. If we break the lows, that needs to break the lows to pay. At under $1, it's pretty tempting. Going to the expected move here. I mean, the average move that I see is around 90 bucks. But I'd like this to be less than $1. See if it fills for 70 cents, I'm going to take this trade. I'll try it. It's not a high probability trade, but it pays really well. So let's see if we get filled at like 70 bucks. Maybe 75. Okay. 80 final offer. So I'd be risking 80 to make 420. Nope. Well, that's unfortunate. Like the idea, but not going to get a fill. So cancel. I'll wait for the dust to settle. Better trade for me is post earnings. Let's say that we are, getting a pullback to the 382 or the 50 zone. Maybe just doing some simple like staggered bull call spreads on Eli Lilly. Let price come to a level that you want. And I mean, I would love, in fact, if we had a pullback to like 880, is go, I don't know, 30 days out, 60 days out, 90 days out. If this level holds and we just go up from there, you have several months of income stacked up. So I'm going to make a note to self. If we get a pullback towards like this, 870 zone, we set a chart alarm here. So 870 is around the 50% retracement. And maybe we don't get it. Obviously, this a stock like this, it's like it could just be down, up, down, up, down, up, and this is just chop city. Like I'm not going to trade that. I did look at some ratio spreads all the way down to 600. That's an expensive stock. I mean, hell, I might as well own the SPY, but it is very tempting. I don't want to see, Trump go after Eli Lilly for pharma. I mean, that's the one thing I'm worried about is if they're going after big pharma. This is a maker, but obviously a lot of their profits come from they distribute. Anyway, 600 bucks is a lot to say that's my level. However, that being said, if I looked at the trade, I think I looked at this last week. If I went January, looked at the 600 strikes. If I buy the 600, sell the 500, I mean, this isn't a terrible trade. 550 by 500, I get a $5,000 profit trap. Yes, I've got some potential assignment risk. There's a 99% chance of profit. It's a, if it fills, maybe a $200 income trade. Um, but it is expensive. I mean, if I own the shares, I'm going to tie up, 25K, 50K cash. So it's like that. That's a big decision for you to be like, yep, I'm going to tie that up, and it's not an index. Um, so probably not the smartest trade, although it's a crazy high degree of profit. So I mean, that would be owning this thing at. I mean, we'd have to fall back to like 2023 levels. All right, what are some of the other ones? BX, Blackstone. I mean, Blackstone is probably getting some heat on this insurance stuff. I mean, Blackstone has a lot of the private equity space that's taking a lot of heat right now. Some of the bubble stuff I'm reading about is private equity insurance. Blackstone being one of them. So I would, I mean, the thing's already been moving quite a bit, right? We've already had a decent tumble. If I'm looking at levels, I mean, I like the kind of the 120, 110 zone if you're looking for support for a bigger picture move, like 120. I'd say, take a stab here, some bull put spreads or either bull put spreads, bull call spreads. See what it looks like here. So BX. So 36 times earnings, cash flow 114. It's like, okay. I mean, this is saying discounted cash flow. I mean, yeah, I want to own it at $100 then, let alone that low. So I'd say if it comes down to 100, it's a good price. I would wait. I think this private equity stuff is the cockroaches they talked about last year. Who remembers the flare up in what was it? Not Blue Owl. Um, what the heck were they? They were like two companies that kept getting thrown around. It was like this private equity blow up, and it was a little underbrush that was on fire. And J.P. Morgan, it was Jamie Dimon. He's like, they were cockroaches to private equity. Got the market nervous a little bit. That was somewhere around that like October sell off. ELIL. Ken, you're talking to the wrong dude about leverage. I'm not a leverage guy. Two times leverage. No thanks. It's look, if I trade a stock like Eli Lilly, it's going to be like very binary. Either this stock has to come down to a level that I'm attracted to, like let's find some equilibrium here on this crazy run. This wouldn't be terrible to do some bull call spreads. I mean, you can do defined risk trading, maybe pay, 225 to make 275 and stack that up for multiple months. I like that trade better than trying to get something timed on a double leverage instrument. If price doesn't come to me, look, I had some runs on Eli Lilly back in the day. I didn't get this last run from 640 to 1,000, so it's okay. So at this point, it's like I'm more interested in this as it splits. If they split, do a 10-to-1 split, all of a sudden the stock's $100, very big difference. But it's a lot of commitment to say I want to do something as far as like ownership. And this is a stock that I would say be good to have. I mean, healthcare is a good space. I mean, I think America loves their Ozempic and their GLPs. Obviously, it comes out that they're terrible for you and they're killing people or they're causing cancer. That stock has tons of risk, but nobody knows that. So I think it's just a lot of money to tie up to have like some uncertainty. I think just option trade's fine, but not at this price. But I steer clear of a lot of the leverage stuff. I've tried it in the past. The double and triple leverage ETFs on inverse ETFs like inverse SPY, inverse Qs. They tend to just get you in trouble. If you're right for a 2 to 3 week window, 2 to 4 week window, you can make some good profits. Otherwise, it's just I don't know. You're just asking for $0 essentially. VIX retreating somewhat. That's good. Yep, I'm seeing that a little bit here. Let's move this chart alarm down to we've got a high around 17.45. That's really not a huge difference. So I think we've called a pretty safe bottom on the day, but I will keep an eye on this. I'll move this one to 18. Keep an eye on it for the day. Okay, TTWO. Yeah, SMCI. I'm probably not interested in that one. Let's have a look. SMCI. So this was a just Goliath move. So in 2024, this is one of the best performing stocks of the year until it wasn't. There was accounting fraud. There was all sorts of issues here. I do want to take a look at it though. It's had some bad news, some bad raps. Fundamentally wise, it looks okay. So price to earnings below tech average. Okay, fine. Forecast to grow earnings at 51%. But for some reason, look at this thing. $29 and discounted cash flow says they're going to be 15. I mean that gives me some reservations. And we've had a 3-year bull market, and somehow this is down to 76%. I mean it's one of those like cigar butt trades. If you think there's a puff left in it, you get a chance. This is not something I want to own. It would have to be a black and white trade. If I lose, I lose. If I win, I win. That's about it. But I don't know. I don't trust it enough. Why of all chip makers? Why in the AI space, the hardware space? Why is the stock down 77%? While there's plenty of others that are up hundreds of percent. So, I smell some phoniness. Something's going on that I don't like. TTWO. Yikes. Is this one who is asking? Garrett, is this one asking? So big drop pre-earnings, yes. I don't know. It to me, all this really does is this kind of takes the wind out of an earnings move. If you already had puts, it's doing well. This is breaking some pretty severe structure though. So I would just look at something like, and again, this is kind of bigger picture stuff, but we're about the 30%. If it holds, okay, if this 30% holds, this is a Gann retracement. If this level holds and it bounces, a very cheap, bull call spread that offers more reward than risk. But I would say, let me take a quick look at this and make sure. IV should be decently high. IV's at 63.2. That's pretty good for IV rank. Expected move, I'm showing 1307. So that's about a 6.2% move expected on earnings. I'm showing earnings average about an 8.86. So broker has 6.2. This is averaging about 8.86. To 1032. So average move on earnings is 1860. Kind of makes me want to get long. But is this a falling knife move? We had a drop of, it's down 21%. Software, yeah, that word alone is. I love the video game stuff. Video game's different. Yeah, I was thinking more like like the Adobes and the Intuits and stuff like that. That type of software, no thanks. NBA 2K. They've got some fantastic games. 6x sales, that's a bit pricey. Current flow 212. Current price is 210. Okay. Decent. Here's a trade I'm going to take. I'll put a pending order in. This is a good one for earnings. I'm going to go out to the February 20th. This is kind of a hope trade. If we come down to the expected move on the downside, there's already momentum to the downside. Let's see if we can kind of hit this expected move here. If I can do like a 190 by 195, okay. Now this would be not a credit spread. I can do one or two things. I can do a credit spread, but if I don't want the assignment risk, I do a buy 190, sell the 195, and I want this to be trading essentially at the money. So right now I can get $2 debit for a $3 winner, right? And that's trading essentially at the money. So if I buy the 190, sell the 195, I'm willing to take this trade. I'm going to put it in for like a 225 debit. So price comes down. Let's see where 190 is on my fib. 38% fib is 198. 180 is the 50% fib. I'm going out for the monthly. Can we, let's say we push lower, gap lower, and then we can fill that gap. Just looking left here. Low around 190. Low here around 180. All right, I'm going to get real picky here. I'm going to go 180 by 85. Give myself a little bit more wiggle room. See if I can get this trade in for 225 debit. This trade might not fill, but I'm going to set this up for I can make 275 to risk 225. Price can fall and continue to fall like it's been doing. If price obviously goes up on earnings, then this trade is not going to fill in. It's just going to expire like unfilled. But I'm going to set it where I want it, and then I'll take this out for the monthly. So I'm going to try to get in for 225 debit to make 275 if price stays above 185 by expiration. So pending order 225 debit. Okay. I'll throw this in as a bonus trade if interested. So TTWO, this is a bonus trade. 220 expiration. I'm buying the 180 call, selling the 185 call. 225 debit is my max risk, and 275 would be my max profit if price expires greater than 185. Okay, but price has to come to me first. Okay, that's officially going to go into my newsbreakers course. That's trade number 110. So 23 TTWO 220 expiration. Okay, pending order. All right. AMGN. Is that earnings today after market? AMGN at all-time highs. Biotech. Wow. Snowflake looks real good. I mean, that looks like one to keep in the portfolio for sure. 255. I mean, this looks financially pretty darn good. Snowflake looks great. I mean, rather than trying to guess on earnings, I kind of want to go out a little bit bigger picture here. Let's see. Let's take a look at the premiums. AMGN. This is December 2024, Liberation Day. 250 or lower. 250, 240. Not a bad income play. What's the beta on this thing? 0.23. Wow. Okay. If this gets filled, again, this is pretty wide, but 250 by 240, that's $1,000 profit trap. I'd be willing to own the shares. See if we can get $3, 305. This is a guess. Try this on my margin accounts. That was freaking easy. Holy crap. Okay, let me try this one. Try to get more credit. 315. Getting filled at 315. I'll try to keep up in my credit here. 320. Oh my gosh. This is freaking easy to get filled. All right, let me try to keep bumping the price up here. 330. All right, 330 looks like it's not filling. Let's try 325. 325 got filled. All right, try to get these all in. All right, so 315 and 325 is getting filled. And then I want to review what we're at for today with current setups, daily profit play, double ups, things like that. We'll get there in 2 minutes. Okay. Project Options Edge, new trade. Okay. I don't want to own the shares, but I'll keep an eye on it. Ratio spread, 92% probability of profit. Assignment risk is about 8%. Break even price if assigned with price less than 240 would be, so I get assigned at 240 minus the $10 profit trap minus the 315 credit, 226.85. And that 226.85 from current price or all-time highs 226 be about a 35, almost 36% discount. Okay, let me see where that put filled. So take a look at AMGN. Put is filling for about 4. It's kind of all over the place. I'll look at one. So put fill here 305. So about 426. 315. So about 420. Let's see if you don't want the shares, manage the put side. Put credit. So the 240 filled for 4. About 420 credit. And you can look at, this would be a manageable loss. So 420. So 1260. Or 1680. So rather than taking on the shares, you can manage that for a loss of about $800. Okay. Not too bad there. Throw that in Project Options Edge. AMGN. So 250. Got it. Okay. Trade in at AMGN. All right. Let me catch up on some comments here. XOM hyperbolic hit all-time highs. I know. That's why I have the shares. XOM, XLE, those have been shares I've been running with all year. I thought we had a pretty good looking energy last year. So here's XLE, XLU, XL, XOM, XOP. That's all kind of the oil and gas space. Currently, XOM's up about $2,300, and I mean, I want more. Like I've got a 100 by 95 ratio spread. I'd like to get more XOM, but like I said, I mean, I'm not going to chase this thing at 143. Like if we get some volatility in a pullback, whether we have like, oil smash down, just typical supply and demand games, oil will play, maybe getting a trade in around 126. If you look at the fair market value for XOM, it's probably in the high 100s. I mean, it's still cheap, man. 20 times earnings, which for an energy company, but I mean, 197, we're trading at 140. So there's upside, but I'd like to at least see a bull flag or a pullback if possible. Otherwise, let me just do another ratio spread. Right now I'm doing, I've got the ratio spread December 110 by 105. So, ratio spread here. So all in all, it's about $400 of income. I mean, I'd like to do more, right? But I'm going to see if I can just buy some shares and get a dip. Walmart hit the 1 trillion. Nice. Okay. So let me see if we can get a pullback here to about 130, and then I can look at another trade on XOM. I'm just not chasing this thing. But yeah, this is to me like one of the big ways to this is to me like the safest slash most boring way to trade AI. Trade energy, right? Trade the bottlenecks. That's the one thing we don't know is we have no idea if hyperscalers capex spending is going to be rewarded if our grid can't support it. If we build all these data centers out for hundreds of billions of dollars and we have an energy grid that flakes out on us, that's not good. So I think like, focusing on buying energy, having energy, whether, rolling blackouts is scarcity. Bottlenecks in energy, higher energy costs, that's scarcity. So I think that's a big theme for this year as far as getting long. It's like, I want to get long scarcity. I want to get long energy, utilities, industrials. That to me is way safer than like, I'm going to buy chips. Chips are fine. It's the physical side of AI. I get it. Chip demand is insatiable, but you need energy. I mean, you can make all the chips in the world. If you have the energy for it, who cares? So, I mean, ExxonMobil is a good reflection of that. XLE is a good reflection of that if you want to get a little bit of a basket. So, anyway, and I would look at, something like this. Take a look at some of the competitors. Occidental Petroleum, I'd say no to that, but ExxonMobil, Conoco, Chevron. I mean, Chevron's a 7 times earnings. Crazy, right? CVX. I've been long this thing since 135, 140. I mean, I if we break this high, it's like, look at this measured move. If we break this range, we double this move, it's like, I think we get to 230, 240. So look at CVX. Snowflake looks great. Dividend of 15%. Are you effing serious? That's insane. If it is not well covered, I'd take that dividend. 7 times earnings with a 15% dividend. I mean, sign me up. It's expensive. I get it, but I could get an income trade. So there's my CVX. I've got tiny little shares. I want to buy more, but I'd rather do a ratio spread. So let's see what a 140 ish looks like for right now. So 150 by 140, and that's a $200 income trade. I'd own the shares. I'd own the shares. If we get a dip or a pullback, I mean, here's why I'm not buying right now. If this rejects and comes back down, I'd rather have a ratio spread, right? Give me an assignment price where I'm actually happy with the stock. If this breaks, and goes, I'm going to take a stab here and see if this thing runs to my measure move. So if we box this in right now, so let's kind of box this in. This is going to be a pretty conservative measurement, by the way. And if we break out, I would say that a upward price target of like 225 to 230 would be a great price target. So for starters, I can get an income trade here. This is a 130 low. I can go 150 by 140, which puts me at that 130 low. I get a $10 profit trap. So 140 assignment minus 10. If I get over $2 on the trade, I mean, that gives me ownership at 127. I'm going to get long Chevron. So let's see if we can get we'll try mid price at 230. 230. 230 not failing. 225. I want at least $2 on this trade. All right, I got filled at 210. Another trade for Project Options Edge. 210. Give me some pullbacks. Okay, so I'll buy shares on pullbacks. I want to see a clear breakout pattern as well. Otherwise, I'll just get the ratio spreads in on my margin accounts. So that would be 2, 4, 6, 8,000. 2, 4, 6, 8,000. About $2,200. Should be filled on that one. Okay, 209. 205. Come on, be generous. 205 getting filled. Okay, trades in. New trade, Project Options Edge. That was 205 to 210 credit. I'm filled. at both credit levels. Price is less than 140. Break even price would be 127.70. Be like 127, I guess 90. So 130 minus 10 minus 205. I don't wait, is that right? No, 140, sorry. 140 minus 10 minus 205. So 127.90. So we have on this trade probably a pretty high probability of profit. It says 86%. We're looking at assignment risk of maybe 15% chance of assignment. Um, fair market value 366. This is a play on energy scarcity. Okay, trade is in. That was the 150 put. 205 credit. I got filled between 215 and 205. I'll just put, whatever, 205 is fine. That's on the low end, but it's fair. Okay. Tech companies pay up. I mean, yeah, in theory, yes, but are they? We can say one thing and see it be totally different. I mean, I just talked to a guy in the golf lodge, the place that I manage to teach golf lessons in the evenings. He's doing fleet management on data centers that are being built. He's been in El Paso. He's in here in Utah. He's all over the country right now. He's like our company is going to triple in size in the next 5 years. That's what we're projecting. Like that's how much demand there is. So we can say pay their fair deal, but what's that's going to do? Are you going to mess with Mag 7? Get them to pay? I mean, they have enough money to do it, but doesn't mean they want to. So I'm sure to do it, there's going to be subsidies and loopholes elsewhere. But nevertheless, you can't just, make energy. We got to have the infrastructure for it. So that is this play. All right. I think that's a pretty good spot. So Uber, Amgen, CVX, new trades on project options edge. We got some trades running for daily profit play. Let's have a look at those before we go. And then we have a waterfall presentation. If you want the trade I put in from yesterday for waterfall, it should still be filled. I think you can get filled on that no problem today. So trade is here. Yep, filled at 50 cents. Right now it's trading for about 65 or 70 cents. It's still a good trade. If you want more credit, you can take more credit or you can move the strikes down a little bit, but it should be easy to get filled like 55 or 60 cents if you're jumping into waterfall income, you want a new trade. This is a good one where we're risking, let's say we get filled for like 55, 60 cents. We're risking, let's say, just say 50 cents. That's the trade I took. We're risking 450 to make 50, but we have a $1,500 profit trap. Okay. So that trade could be worth up to about $1,500 and change for something that's we're risking 450. But the income side, it's a very high probability setup. So let's see what happens. Okay. So you got to, trade if you want it for waterfall income. If you're a new member, Blake will play a session here in a moment. Trade details, John. It's a ratio spread on CVX. So what I'm doing on CVX is this. I'm doing a 150. VIX is hitting a fresh high right now. Okay, 150 by 140 ratio spread. So that puts my assignment price around 127. So I'm put a line in the sand here around 127. I'll put break even around 127.90. So essentially, as long as price stays above 140, there is no risk on this trade. So if I go 140, if we stay above 140, there's no risk. That's my measured move. I'm willing to take on shares. My stop loss, I mean, I'm just going to repair it. I'd own it. I'd keep it. But potential risk below 140. If you don't want the shares, I do want the shares though. So there's no sideways risk. There's no upside risk. And price would have to drop. Let's see what the percentage would be. For me to own this, price would have to drop from current levels. Oops. If CVX were to drop to, let's say, 140, we'd have to drop 21%. Now it can happen. I mean, these are somewhat volatile in nature. We've seen it in the past, but you can see since 2022 we've carved out some very strong support. I honestly think that what I'm going to end up doing with this trade is this will be a full profit of $2 and change. And if we get a breakout here, I'm probably going to buy more shares and expect this thing to measure up to like 225. I think that's the trade. Hasn't been filled yet. No, I've not been filled yet. Not on engineered options. Pending order. Let me check. So my 2.9s. Yeah, it's trading for like 35 cents. The 95 and 94. Let me check on that one. 95 and 94. Close. It's like 41, 42 cents right now. Still not filled. TTWO. Yeah, but that's why I put a debit spread in at the credit that or the debit that I want, Larry. I'm putting it in. I want price to fall to my TTWO levels. That's why I want price to pull back. So we've already dropped a decent amount. I'm looking to see if there's some more to this. So I looked at the current expected move, and that if it pushes down here, I'm going to try to buy this and go for like a gap fill. Yeah, it's pending order. Correct. I put it at 225. Pending order. Yep. Nice fill on that, John, for 210. Good. Okay. Let's review daily profit play today. So we had double ups. I'm going to keep an eye on those. Let's check our prices here. So daily profit play defense up $40. Daily profit play, our standard trade. We need price to stay above 69.30. It's at 35 right now. It's down a little bit, down $1.85. I'm risking $8.50 on that trade. My defense has up to $1,400, $1,440 of profit. Hopefully enough to maybe offset some risk, but we'd have to drop to like 69.10, 6900. Hopefully it doesn't happen. I'd rather win daily profit play. That's a much easier day to manage. You might be like, well, I'd love to make $1,400. Yeah, me too. But I'm also risking $8.50 on my daily profit play. So the easier trade is I have defense if I need it, but I just win daily profit play. That's an easier day. I might make more money on defense, but it's a lot more slippery. It's a lot more difficult to manage the day. Okay, double ups. I'm looking for net profit. I have this iron fly is up about $60. $60. The other one's down almost full, 125. So if I get this one to hang out around like 45 or 50 today, if somehow we can get in here late in the day around 45 or 50, this one could be worth about I think $800 or $900. The perfect spot in this double up trade is 69.47.50 because I split the difference. So that would be worth max risk is about $1.40. So let's see here, $1.40. Want to say off of the 15. So that's my credit because I split the difference. Let me double check this one. So this was the 1360 fill. Max profit would be 860. So if we're hanging out between 45 and 50 today, 69.45, 69.50 today, I've got a potentially an $860 winner with a risk of 140. We're gonna have to see price bounce a little bit though. So it's up a little bit of profit, but I want to see if we kind of hang out around like, this area is a little bit profitable, but late in the day, it's like I need price to be closer to like 45 or 50. What is happening at sure. Okay. So trades for today, watching, watching, watching. The double ups are pretty low risk. You know, this one is looking terrible. So this one at 7,000 plus for $1.25. This one's probably gonna be a loser. I'm looking to see if I get something in this between 69.45 and 50 near the end of the day. You know, let's see if price, and this is what kind of has to happen. If price is going to hang out here for the time being and maybe work its way back up into, 40, 45, or 50, then that looks better for profit on double up. If we end up falling down to about 69.10 today, 6900 today, then that is my defense trade. That's a butterfly spread defense trade on my daily profit play. So hopefully, I mean, look, what makes the day easier? We stop going down, we hang out here, and we just chop around for the rest of the day. That would be a winner for daily profit play. That'd be a winner on double ups. That could be a pretty good day. If we slide lower, I'm playing defense on daily profit play, and I need to see where things kind of settle. The double ups are pretty low risk. I'm not worried about those risks necessarily. Those are, small risk trades. I typically always set them up that way. So I will watch and see how these settle. Obviously, the 7,001 is likely going to be a full loss today. I'd love to give the middle finger to those gamma levels at 7,000 because they clearly didn't work, but markets flipped today. Let's see if the VIX can show some containment. VIX is, not showing signs of stopping yet. We're up to 17.5 VIX. So I got a chart I'm set at 18. Let's go 17.5 VIX. Looking at about a 1.1% move. So take your close, 1.1%. Now we're talking a low around 6. I mean, it's still about the same, 6,900 bottom. So it's very possible that we could see, maybe pressure to 69.10, 6,900. If that is the case, if you're in daily profit with me and we are pushing down towards 69.10, 6,900, this defense trade hopefully will be showing some decent profit. We're 15 wide. It was pretty cheap. I'm hoping we can at least see, $200-300 of defense here. Obviously, that might, if you want to take the profit on that defense trade, it's not enough to offset the full risk. But if it washes some of it, that's better than not. So we'll make that decision if we have to. Selling another daily profit play at $4.50 to $5. So what are you trying to say? You want to take the exact same strikes? I mean, all you're looking for is you're asking price to, yeah. I mean, all you're doing is you're trying to tell me that you need price to stay above 69.30. If it doesn't, you're just taking on risk. I mean, daily profit play, that's not a daily profit play trade. Like if you want to double up on this, double down on this trade, I mean, you might as well try to put it delta neutral. I mean, right now it's like, look at the mechanics of the trade. Call side, if I did, 70, 75, and then 10 delta down here, it's like we could do 75 and 65. It's like you can get another $1.25 and try to keep this neutral. But, my centeredness on the day, my efficiency on the day is already established. I mean, you can take iron condors all day long, but I don't know. I mean, this isn't really a centered price. This is like I'm centered off of current. So if you get in and get out, maybe you can grab, if we go sideways here for a second, if we put a trade in and this goes sideways, then you could maybe grab, 20, 30% out of that $1.25. I don't know. I don't like the trade. You're throwing another, $500 risk at it, and you're trying to tell me that it has to stay above 69.30, which it might. I hope it does. But why take on the unnecessary risk? Just my thoughts. I mean, for me, it's like I'm already in the trade. I'm defending the trade. So I don't need to, double down on the risk when if anything, it's like I still plan on winning the day. If the market is efficient and we stay above 69.30, we have a winner. Right? So if we stay above here, we have a winner. If we come back down here, I'm hoping that the defense helps us wash away some of the risk. And I don't know what the rest of the day is going to look like. But if the VIX peaks out here, okay, let's say that this is the VIX high around 17.6, and then the VIX retreats. Well, we can kind of safely call our low, and let's see what the rest of the day looks like on the VIX. But the hard part is if the VIX goes higher and higher and higher, that's not a fun day to kind of keep moving the bottoms and see that maybe we go below 6,900. So anyway, leaving you today. We're going to have a webinar at 1 o'clock. Let me see here. Yeah, so we'll have a waterfall income stream in just a few minutes. If you want to stick around for that, I'm going to do a standalone webinar at 1 o'clock if you'd like to join me. But I will be hanging out managing the day. So daily profit play, it's down. Defense is up, but obviously not net profitable. I'm not going to bail. I think that we have a chance to still see the market stay efficient. We also picked levels that were like 45 to 50 points out of the money from a plus minus 28. So I'm hoping that the market will respond to that level and ultimately settle back in within about 30 points or so. If it settles within 40 points, we should still be okay. We opened up at 76 today and our strike was 69.30. So we basically need the market to not move more than 46 points today and we'll be okay. All right. And then double up, depending on where we kind of settle. If I can get some net profit, if I can get some net profit. So this one's up about $50. This one's down, max risk is 125. So if I can get this one to look better later in the day, this is an iron fly. So anything at 69.40, 42.50, 45, this one might show, up to about $800 of profit. So if I get them to offset where it's like, if this shows 250, I'll take the profit, take the loss here, make about $120. So these are easy to monitor and pretty easy to manage because it's low risk. Daily profit play, I monitor, I manage. Defense, if I need it, it's there if I need it. We know the lines of the sand. If VIX is going up, we're pushing down towards 6,900. This defense trade is good to have because it's very low risk. $55 to make $1,445. If we need it, we'll be happy that we have it. Otherwise, we just want price to stay above 69.30 for a winner. Okay. All right, good stuff. Okay, let me hit up Blake here for a moment. Okay, good stuff. I will be live again at 1 p.m. I'm going to keep an eye on the VIX for the day. Busy morning. I mean, obviously, I wish that it was just easy peasy lemon squeezy, that we just had like easy daily profit play. But again, just like yesterday, we have to trade the market that's right in front of us. And right now, the VIX is up a little bit. Prices are moving a little bit more than we want. So that's what we have to kind of be ready. Hopefully, this will kind of contain things. These gamma levels are there for a reason. So even on the Tanuki trade gammas, we didn't see much below 69.30. Take a look at this right now. I mean, I don't see much to the downside. I'm not saying that it can't go lower, but rarely do I see that we have these gamma levels high and low, and the market's like, we'll just break all those. So I would think that today, if there's any type of invisible floor, this is a pretty good spot to see some support. And I hope that's the case, obviously, because obviously if this breaks, that's no fun for the VIX. We're playing defense, and we manage our butt off. That's what we do. Zero DTE is all about managing risk and trying to survive the day, win the day. We should win a lot of our days. When we have a difficult day and the market's not cooperating, we have to survive those days. That's the whole point. So even if I'm washing some of the risk and I can survive, live the trade another day. But the day is not done. So keep an eye on this. Keep an eye on updates and telegrams. Project Options Edge, good stuff today. I mean, 3 new trades I like. Took a new trade on earnings for TTWO. That's pending, so I don't have that one filled yet, but we'll keep an eye on it. But all right, Blake, let's fire some waterfall, and I'll be live at 1 o'clock as well. And by the way, with waterfall, we did that one yesterday. That was 1 p.m.
Yeah, we did it. This is the stream from yesterday too, I
Yeah,
believe.
I know. I'm just thinking like Q&A wise because I think I need this room by 1. So just keep that in mind if we're
What?
still in this session.
Okay.
Just keep in mind. I'll hit you up on Slack if we need to.
I can cut it. Like the last 9 minutes I can probably just cut it if you need to
Okay.
start in. That's
Okay.
no problem.
Okay. I'll need it by 1. So maybe I'll check with David too because he might be opening up the room at 1 o'clock.
I can actually let me check and see what room it's in. I'll start this, but then I'll let you know what room it's in. It
Okay.
might be in a different Zoom.
Okay. Sounds good.
I'll let you know.
All
Okay,
right.
here we
Thanks.
go.
See you.
You're welcome. We'll see you.
543 trades. Results 97.1% win rate, 17% average return on winners and losers with an average hold time of 11 days. Every weekly windfall targets roughly $1,000 in income based on a 5K risk in every example we talked about today. Again, it's important you understand, like, yes, we're talking about $5,000 examples. Okay, you're getting about 15 to 20% return on that risk. You can scale that down, scale that up. You don't need $5,000 to take these trades. Today's risk that I took on, $450 risk, is the maximum risk for me. Okay, and that trade could pay me up to over $1,500 in profit. So anyway, we'll talk about that in the classes. So from September of 2024 to current, so this is an update. We should have 126 winners because we did have a trade close out at the 130 expiration, which would have been last Friday. The 128 or the 128, 124 live trades. So I'm pretty sure we have 126 live trades, live winners at a 94+% win rate. 16% average return. That includes winners and losers with the average hold time of 12 days. Again, we cannot guarantee any specific future results. There's always risk in trading. You know that. You trade, you sign the disclaimers, all that good stuff. If you want to check out terms, conditions, disclaimers, check it out on our Prosperity Pub homepage for more information. All right, final thoughts here. We get this. It is trading. Trading is a game of winners and losers. My goal is to win more than I lose. My goal is to win bigger than I lose, and I make money. So when we take losers, we understand there's no black box miracle system that prints out winning trades automatically. The whole purpose of my trading, the whole purpose of my research and working with traders just like you is to give us an edge in the markets. If you are not comfortable placing trades and potentially taking on risk and losing a trade, then you need to take a demo account. You need to be paper trading. You shouldn't be trading with real capital. This is risk capital. So losses will happen. I just want you to make sure you understand that. But when we're winning 94% of our trades, we don't lose very often. So we trade with a lot of confidence. All right. Appreciate everyone being here today. My name is Chris Pulver, and thank you for joining. With nearly 30 years market experience, I hope I don't look that old, but I've been in the markets for 26 years now. Trade everything: stocks, options, futures, forex, cryptos. More than 10,000 hours spent trading and teaching. I've been doing this for a long time. I've certainly seen a thing or two. What did we see this last week? One of the biggest single day moves ever in gold and silver. What did we see last year? One of the biggest single sell off peak to troughs and one of the nastiest volatility swings. We've seen COVID and bear markets and bull markets. Right? What's happened the last few months has been pretty alarming. So I think this is where the gold and silver mania started to happen. Governments around the world have become pretty reckless. So this happened, late last year. China's printing 5 trillion yuan, and they're basically doing it to prop up the real estate market and also backstop their stock markets. At the same time, the Eurozone coming out of nowhere to finally do some fiscal spending, and they put together a $1.1 trillion spending package on defense. They're also reliant on energy sources from Russia, which is also a huge plaguing thing for the Eurozone. And meanwhile, good old US of A. Government debt is skyrocketing with no signs of slowing down. We have a partial shutdown right now. We had the longest shutdown in history last year. The government just continues to spend money. If we have the Supreme Court rule that tariffs are unconstitutional, well, there's another $500 to $600 billion that we're going to have to come up and make up for, or just keep spending and run our deficits even hotter. So, point is, does this lead to an inevitable outcome? Second wave of inflation? Possibly. Nobody wants to experience this. I certainly don't want to see this day to day. I don't want to see the loss of our dollar purchasing power. And this second wave, I think after dealing with this persistently since 2020, when everyone had this on, everything's more expensive now. Everything in life is more expensive. If we go up again, and we potentially have a mild hyperinflation, it's not going to be pretty. It's not going to be fun. So if you care about your family's financial future, and I know you all do, as do I, then I urge you to pay close attention. Because not only is this new income technique going to help us handle the rising cost of living, but by the end of this broadcast, you'll get a chance to join me. What's hopefully going to be, I think says 117th winning trade. We got to be at 119, 120 as far as winners. Anyway, I'll change that later. So before we get started, I want you to think about this for a moment. When it comes to risk capital, Would it be nice to target right around $1,000 each and every week? Sure, why not? Who wouldn't like $1,000 every week? Okay. It's one trade, it's one ticker, and it's the same time each week. So it is like clockwork. And I'm being literal. Like, I mean this. One trade, one ticker once a week. What happened on Monday, March 4th? Anyone placed a trade with me in Waterfall Income around 11:59 a.m. Shut the computer down and checked out for the rest of the week. Sure enough, when everything worked out, we had 1144 on that 5K risk just a few days later, automatically deposited in our broker account. The following week, Monday, March 11th, just like clockwork, again, right around noon, a few days go by, trade would have automatically closed out for you for another winner, 1186 in income. Very next week, March 18th, rinse and repeat, 1297 in income on that 5K risk. And of course, the final Monday in March was no different. Same day, same time, same ticker. Week 4, 1150 in extra income. Even though the stock went down, we still made money. Got right around that 20% return on risk. So altogether, that's 47.78 in profit, almost $5,000 in profit during the month of March. And that's one trade, one ticker at the same time each week. Now, I call these weekly income payouts weekly windfalls. And they've shown the power to pay us even when the stock market goes up, down, or sideways, we can still get paid. This is one of the silkiest, smoothest equity curves that I've ever seen. This is a 12-year test. If I could trade it back to 1973 when options were created, I would. I don't have that data, but I'm pretty sure that what the market has done is continue to make all-time highs. I would put the strategy up against anything. I love the strategy. So 97.1% success rate. So what does that look like? Well, if we've got 100 trades together, we've got 97 of the winners. We're right there, right? We're doing that for real. So numbers like that, I think you can see why I'm excited to share this with you. And in just a moment, I'll reveal why this trade takes place every Monday at exactly 11:59 a.m. Eastern time. But before we go any further, I want to be very clear. There's nothing guaranteed in the markets. There's no instant income magic pill. So understand that this technique is not about gambling on home runs because it's not a home run trade. This is a base hit trade every single week, like clockwork for income. So it's a realistic approach that is designed to help us have an opportunity to target steady income on a weekly basis. It doesn't matter if you have a multi-million-dollar retirement account or if you're just starting out with a few $100, okay? Anybody can learn this technique. I'm happy to teach you. So a standard brokerage account, permission to trade options, internet connection or connection to your broker app, and just a couple minutes with me live on Mondays at 11:30 a.m. or just a couple minutes to see my alert that gets posted in your classroom. You can take the trade and follow along just a couple minutes each week on Monday, same time, same place each week. So obviously, I'm trying to make it as easy as possible, but if it's not easy enough, don't worry, because you'll also be able to take the trade live with me every single week. All right. The trade that I put on today, hopefully will be again, I'll check the numbers on this, but 117th winning trade out of 124 trades. I'm showing in my tracker up to like 138, 139 positions. So anyway, I'll double check with the team on the updated results since we did have trades that had closed out on the January 30th expirations. But nevertheless, the trade is in, trade is valid. I like the trade. I'm giving myself a 10.5% room for error. I can make up to $1,500 on the trade, and my maximum risk for me personally is about $450. So give us a chance to target, $1,000 hands free. If you're comfortable risking 5K, 10K, 20K, 50K, or $500 or $200. I'm not the one to tell you what you should be putting on trade size wise because that's you and your dollars and percentages. Okay, I know what I'm comfortable with, and I teach this every single week. So that perks your ears up, then stick around and welcome to Weekly Windfalls. I've been in the markets, like I said, for 26 years now. I personally manage 7 figures. Right now, I'm sitting up around like $5.1 million. Options. I love the options market. It is one of my favorite ways for the last decade to generate income with owning 0 stocks, right? I don't love owning stocks. I like trading around them for income. So anyway, that's what I do. On top of that, I trade live with students every single morning. We have a very active session every single morning, Monday through Friday. And you can come in and get some touch points on all these services that I run, see how we grind out for the mornings as well. And we are doing very, very well. So some of my top followers making a killing here. Here's Ken, first month with me, 16 wins, 1 loss. Chris is great at coaching, explaining, managing risk, does it all each live every single morning. Here's Kathy, full-time trader nowadays. Kathy with the account size managing and making up to about $1,000 a day on average. Kathy just confirmed that last week as well. So still going strong. Here's Randy. I've had over 200 wins and 92% win rate. Learning a lot in the process as well. Here's Lynn, took a 4K account, used this, one of my strategies as a growth strategy, and turned 4K into almost 20 grand in just a couple of months. It's awesome. So I'm revealing a brand new technique that maybe you've never seen before. And again, the trade I took on live today is valid and still available. If you like it, you can get it as soon as, I don't know, the end of this webinar. So before we dive in, it's important to remember that this is not a get rich quick button when it comes to trading. In fact, there is no such thing. This market will humble you like nothing else. So please understand that when you place the trade today, if you take the trade with me today, be smart. Think about the max risk. Think about the profit. Don't over leverage yourself. These trades are designed to help grow your account over time. So that said, your timing for this brand new briefing could not be any better, because I think that it's no secret that nearly everybody, young or old right now, is a little strapped for cash. Inflation, persistent inflation, life is more expensive. Prices have been higher. They've been going up at like 4 to 5% every single year for the last 5 years. Stuff's more expensive. Okay. The price of literally everything has gone up. So I don't know anybody that's staring at life right now thinking like, yeah, life just got cheaper. It hasn't. It's not. This is what we're all dealing with, and it's not fun, right? So many Americans right now barely afford to save any money at all. Check out this. This is a personal savings rate. It is plummeted. People are just living on home equity right now. People are doing all sorts of stuff just to get by and maintain a standard of living. So we're putting less than a tenth away of what we did a few years ago. Credit card debt at all-time highs. Okay, we're over $1 trillion in credit card debt. You know, the buy now, pay later stuff is very scary at some point for some type of consumer debt bubble, if you will. You know, topping $1 trillion for the first time in history. It's a scary problem that most people are facing right now. You know, if you got to take on credit card debt to, you know, save your dog at the vet, or any unexpected expenses, this is not fun. You know, surprise your loved one with a gift. Whatever you want. I mean, unfortunately, a lot of people are trapped with credit card debt, and we get that that's the worst kind. It's the worst kind of debt to have. It's predatory. I don't know how it's legal, but that's exactly why I'm here today. I'm on a special mission, unlike anything I've done before, to show we got a big room today, so I'll show 150 people, 200 people today, exactly how you can offset the rising cost of living by targeting, you know, whatever income you're looking for with me on Mondays. But let's say $1,000. If you're willing to risk 5,000, make $1,000 every Monday, all by placing one trade, one ticker at the same time each week. Back in April, okay, you have $5,000 to play with. That's the amount I'll be referring to in every example today. So we'll talk about that at the end as far as risk and reward. Now, you don't have to invest that much. You can take these trades for as little as a couple $100, as little as $100, in fact. April was a big shakeout in the SP. This is April 2025, April 2024. Funny, it was the same thing. Most of the markets took a huge hit that week. Watching the portfolio, this was April 2024. The market was down 5% that month, by the way. April 2025, the market was down as much as 15%. Yikes. And we still made money, by the way, in April 2025. In fact, pretty much every asset sold off during the month of April. S&P down 5%, NASDAQ down 6%, Bitcoin slipped double digits. Even safe haven bonds were nearly down 10%. Almost every investor would have lost money, at least a few $100, probably to the tune of thousands of dollars, at least in a drawdown. But folks taking advantage of these weekly windfalls would have fared much better, because they would not have hit just one time, not just twice. But guess what? Every Monday you traded with me in April, we had a winner in weekly windfalls. $1,054, $11.66, $16.39, $11.53. That's over $5,000 made in just the month, while most people are staring at red in drawdowns and losing their shirts. And again, this is one trade, one ticker, same time each week. Okay, let's do some math here. The average household pays around $6,100 per month in living expenses. That's just to get by. Okay, just to make ends meet, just to cover necessities. We're talking, healthcare, food, clothing, gas, electricity, right? Maintaining your house. The median annual household income is around $75K. So let's look at the math. That's before taxes, so that's gross, not net. So tell me this. This is where the pinch is. This is where the K-shaped economy is getting worse. Household expenses on top for $73K, gross income $75K, right? So how are people keeping up? Mathematically, they're not. It's tough to save for retirement. Forget about the dream vacation, the dream car. Things are getting pushed aside right now. Cash is simply way too tight for a lot of folks. But with windfalls, we could have known that, we have extra income available every single week. And if this helps, that helps fill the income gap we desperately need right now, let's get it. So also, I've said this, trading, in my opinion, is one of the best side hustles in the world. You don't have to get a second job at Sam's Club, Home Depot. You don't have to drive for Uber. You don't have to drive for DoorDash, right? No overnight time or overtime hours, not working the weekends. Learn how to trade. I'm telling you, it's the greatest side hustle in the world. Keep in mind that the extra $5,000 in April would have come during one of the worst sell-offs we had for the entire year. We're live, Sean. Every major index, Bitcoin, even bonds were in the toilet. Now, of course, I can't guarantee any future returns against losses, but we know this. Like, this is trading. The markets can be unpredictable at times. But as these type of set of returns, it gets me excited about sharing these weekly windfalls with the world. In just a few minutes, like I said, the trade that I took today with all my members, you could be lining up for that 117th winning trade, and hopefully there's some income coming your way. One trade, one ticker, same time each week. Just like happened the first week in May. We had winners in March, winners in April. Here's winners in May coming our way. S&P endured a month-long sell-off in April. Then we had a nice little recovery rally in May. So if you're a buy and hold investor, you're a 401 holder, guess what? You're back to break even after being down heavy for a month and then back up to break even. Now, if you're in the weekly windfalls with me, take advantage of this every single week in May. We had another 4 winners in a row. Not too bad. There's 1150, 1209, 1101, and 1672 in income for the month of May. That's over $5,000 in extra income going 4 for 4. Again, another week trading with super confidence, another month trading with super confidence. And that is how our silky smooth equity curve looks. And that is also, you might be thinking like, well, Chris, we've been trading bull markets the whole time. Not true. Okay. We've had 7 corrections in the markets of over 20%. We've had 7 in the last 10 years. And that's still what our equity curve looks like. So even with the market literally going up, down, sideways, we can make money. And that's with legitimate bear market scares. We still make money. Okay. So if you're twice as confident in the method, you want to invest twice as much. Sure. You can have an extra $10,000 in income, 5 figures in a single month. Now, people aren't strapped for cash because you don't want to save money. I get it. We all want to save money. We all want to make money. Everyone knows how important it is to beef up a rainy day fund and have some emergency funds set aside. But everything in life has gotten more expensive. We are now on 5 years of persistent inflation that everyone feels, and life is more expensive. And it's becoming very, very difficult to save money. In the last few years, correct me if I'm wrong, you've probably seen this in your own budget, right? A new car payment jumped up from $450 on average to almost $750 a month. That's a huge increase, nearly $300. That's crazy. You add that with a 50 to 100% increase in car insurance. What the heck, man? Like, transportation is expensive. How about the price of fruit at the grocery store? Largest annual increase since the 1980s. So it's not just car payments and grocery bills that are skyrocketing. The average mortgages, I mean, come on. We have literally the most unaffordable housing market we have ever seen in this country based on what it takes to buy a house. It is now like 6 times salary to buy the average house. It used to be 2. Okay. This house was, $1,600 mortgage payment. Just a couple years later, it almost doubled. Same square footage, same house, same neighborhood. Somehow that price is worth more. I don't know. And dollars, yes. And gold, no. Right? Hard fact is, this is only the beginning. I don't think that the Fed is going to save us. I don't think that Trump is going to save us. I think that this is a reality that is brewing in the background that we have to figure out how we can offset, potentially persistently higher inflation or sticky inflation or our weakening dollar. So if prices are going to continue to go up or persistently stay more expensive, we have to find ways to offset that. So this is the 1970s over 2020s. This is a pretty scary chart. I mean, this is what happened when we had inflation running hot for nearly a decade. There's a spike up and then a calm, and then we had a second wave that lasted years and years and years and basically crushed the economy. Now watch what happens if we overlay the 2020s. We had that huge spike up to 9+% inflation. We've come down to 2% ish, right? That's our Fed's target. We keep being told it's that, but remember, even at 2% inflation, which is the Fed's target, that means that prices are still going up by 2% a year. Things aren't getting cheaper, right? So I just think that people are sick and tired of inflation. So it's a big deal. So what comes next? Well, if we have higher inflation, maybe it's in a commodity space, right? Maybe oil is going to get more pricey. Then pay at the pump gets pricier. Then gold and silver had their crazy run that they've just had the last 12 months or so, and they just kind of crashed on us the last 24 hours, 48 hours. But if this second wave hits, it's going to be awful, right? Sends the cost of living even higher. Some economists suggesting we could see up to like $20,000 or more added expenses every single year. Nobody wants that. I hope nobody has to deal with that. But if we could offset that crap and make some money and grow our accounts and stay with the ever-rising cost of everything, well, we're not falling behind. How about that? Doesn't that feel fine? Let's offset it. Let's make enough. Let's have a surplus. And we do this every single Monday. One trade, one ticker, same time each week. Anybody can learn this technique. I see a lot of familiar names in the chat that are members of mine. You can do it from anywhere and do it anytime. As long as you have access to any regular brokerage account, permission to trade options, you can do this on your laptop, on your tablet, on your phone, on your broker app, just a few clicks of a button. And you can target whatever income dollar amount you're comfortable with each and every Monday. It's just risk and reward. That's all it is. What came next June? We had the big sell off in April, but we still made money. We had the rally in May. We still made money. We had a continuation in June. We still made money. There's another 4 for 4 in our weekly windfalls. Okay, another month without a single loser. There's 1250, 1000, 1000, and 1044. That's 4294 in extra income during the month of June as the market continued to rally. Now, for some of us, $4,200 in a month could be life-changing money. Maybe it's certainly just, I'm happy I'm making money in my accounts. I'm growing my accounts, whether it's retirement, cash margin, side hustle money, whatever. But maybe for $4,200, it seems it's moving the needle, and maybe others it's barely noticeable. But doesn't matter where you stand. I sure like winning trades. I sure like making money. I like moving the needle in my day-to-day life. I'm sure you do as well. So catch up on some bills, replenish your savings, or even surprise the family with a weekend getaway. Be fun, right? Now, just to recap, we're talking 16 trades back to 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 back. Several months of trading, same time, same place, like clockwork on Mondays, and we have a $1,000 a week goal. We got paid around $1,000 each week. So this is why I call it weekly windfalls and waterfall income, because these results can really snowball and make a big impact over time. So those 16 examples, we have almost $20,000 in 4 months in the bank, in our account. Cash money. So we annualize that out. We're talking about almost a $60,000 raise, whether it's our trading account, whether that's like picking up a side hustle job, whether that's a raise at work that maybe nobody's getting. So, how many of us got a $60,000 raise at work last year? Probably not very many of us, right? Everyone's talking about the peanut butter raise, which is maybe across the board. They're just making everyone like, oh, we'll give you 1% raise. That's less than inflation. Okay. So anyway, with the success rate over 550 weeks with this trade, silky smooth, even through 20+% corrections, we're not taking a lot of losses. Okay. We've had 116 winners on live trades. I think we're at 116 for sure, possibly 118 if this goes to the 130 expiration we had last week, because we had 2 winning trades. So you might be thinking, could you even lose? If there's hardly any risk at all, could you lose? Yes, obviously. It's not perfect. Of course you can. Nothing's guaranteed in the markets, and that's why we should never invest more than we can afford to lose. The one thing I always stress in all of my classes is risk versus reward. If you are not comfortable placing a trade for the said risk, then do not place a trade for that said size. Trade amounts that you're comfortable with. We should win all of our trades. As many trades as I can muster. If I can win 100 some trades, I'll be happy. But the reality is I'm winning 94.5%, 95%. So I realize that it's not perfect, but when I do take a loss, I need to shrug it off and know that the process will still pay. And we make money in the long run. We make money even short term, medium term, but the process works. Okay. So these are designed to help limit the number of losses, because nobody wants to place a losing trade. I certainly don't. I wouldn't place these trades if I thought we're going to lose. So there's a risk cutting trick that I'll share with you today. There's also, we do this every single week when we're live together. And I'm proud to say these weekly windfalls are truly the safest way. I do mean this. Like, this is truly one of my favorite retirement-based strategies. And I'm not retired. I'm long from it. But I do this stuff every single week to consistently target extra income. It's one of 2 strategies that I offer that every account that I look after gets the trade. Okay. Because I'm very picky. When I'm managing accounts, I can't 0DT day trade in everyone's account. I mean, I can't. I don't have the bandwidth to place that trade that quickly with that type of precision. But when it's something like this, where it's safe, reliable, not time sensitive, weekly trades, this piece of cake. I can do this for everybody. So Monday, in July, we have 1044 in extra income. Week after that, the second Monday in July, 2377 in income. And the secret behind this is in the options market. It's a little known niche in the options market. And of course, I say the word options, and some people are like, oh my gosh, options, isn't this risky? Isn't options, aren't they risky? Well, the answer is sure, they can be. But most folks use them, I think, the wrong way. Most folks use them to speculate, right? Most people use options because one contract represents 100 shares of the underlying, and they leverage. That's what options are. So buying options can be risky. It's how speculators leverage large sums of money, hoping that the stock moves the right direction over a certain period of time, and you need kind of that quick fix. You need that quick hit, really aggressive price action. We don't need that. Problem is when most people buy options, are not typically getting the payoff, right? So here's a scary stat. Most of the time, People that buy options for the first time and get into this pattern of like, I buy options. Okay. Well, 90 to 95% of all your options that you buy are going to be worthless at expiration. Even if you're right about direction. Even if you're right about direction, you can still lose, which is incredibly frustrating. So that means that most buyers are completely wasting the money. If you think about it from the market efficiency side, and most folks don't realize there's another way to play the game. So options since 1973 has been a zero sum game, meaning that when an option buyer loses, there is somebody on the other side of that trade, a seller of that option, winning. So in an ideal world, when 90 to 95% of all options are expiring worthless, it stands to reason that selling the options, you win about 95% of the time. And it's how we've seen that edge go into our favor where we have a 97+% win rate. So essentially we're doing this, and this is like the easiest layman's term I can give you, but we're selling options to speculators. So to make things simple, let's think about this like you're in Vegas. Okay. So would you rather be the person sitting on the stool, pulling that lever over and over and over again, hoping to hit one jackpot for the night, right? Every transaction at the slot machine until you inevitably give it all to the casino. You know the house edge is not in your favor. But when you're selling options, you're switching sides. So you go from being the sucker that's sitting there pulling the lever over and over and again, knowing you're gonna lose. You play long enough in a casino, you're gonna lose all your money. They bank on it, right? But you become the house if you sell options, and now you're collecting money from almost every transaction. Okay, and that is why we're able to target this income of $1,000 every single week. Yes, we're risking 5K for it, but if you're risking 500, you can make 100. You're risking 100, you can make 25. I mean, we're getting 20, 25%. 15, 20, 25%. Whether it is a bull or bear market doesn't matter. It hasn't mattered. So the very next trade, third Monday in July, 1379 in income, same risk profile. Monday after that, 2081, same risk profile. In nearly 30 years of trading, I have never seen, nor do I use, a more reliable swing-based strategy. And honestly, you're not going to see these type of steady returns anywhere else. You're not. I don't know anybody in the company that's taking the same trade I am, not with this strategy. So let's say this, you have $5,000 stashed away in a high yield savings account from March to July. So go March, April, May, June, July, 5 months. Okay. Yields, if you're lucky right now, you might be able to get 4% yield. Maybe. You're up $80. Okay. Maybe. And you're probably not, because it's going to be, 4% annualized. So you're not up that much. What about the S&P 500? Even if the S&P is crushing it, you're up $430. But with the same starting stake in the weekly windfalls for 5 months, yes, it's risk capital each and every week, but you're trading with me every Monday, like clockwork, getting winners, up, down, sideways. That's our weekly windfalls profit, 26K. Yes, it's risk capital, okay? But if you're going to use your capital to make money off your capital, wouldn't it be nice to have that type of profit to show for it? I'd say yes, okay? Keep in mind that's not even after a full year. It's not even close. So do you need to watch the markets like a hawk for these type of steady returns? No. The point is we set the trade up and the broker can automatically close us out. We can take full profit, which means way less time in front of the screens and more time doing the things you love. So believe me, in all my years trading, I've never seen anything like this. This has nothing to do with risky naked options, by the way. It's not that. And I'll show you in just a moment here targeting this weekly income. If I've got any golfers out there, it's the 2-inch putt that your buddy should give you, maybe inside 12 inches. Or if you're a basketball player, a little layup at the hoop. Hopefully you can make that shot. It's a tap in. It's a layup. It's as easy as I can make it. It doesn't matter where you live. It doesn't matter who your brokerage is. It doesn't matter how much experience you have in the markets. I will teach you how to take the strategy. Anyone can start using this brand new method and help target some extra income right away, same time, same place, each and every week. And I'm going to show you everything you need to know to start using this groundbreaking income tool today. All right. Like I said, we did have a live session this morning that is just wrapped, but the trade is valid. You can still take the trade. We also have a step-by-step video series on waterfall income and weekly windfalls. It gives you the first trade, all the details. I will do this for this class at the end of this. I'm going to try to do a very short video and just walk you through the current trade. Okay. So typically a video series, a little how-to, a little strategy guide, PDF, publisher Nate and the team wants to charge like $497 for this, but for this, I can give it to you for free. And you'll be pretty shocked how clear cut it really is. And you can immediately start using each and every weekly windfall trade if you want to. And all it takes is hit a few buttons, trade's locked and loaded, and that's all there is to it. Okay. Just like anyone who saw this first Monday in August 5th, set up the trade around noon on Mondays, locked in an extra $955 automatically, right? and you get it done the very next week. August 12th, a few minutes to set up the weekly windfall, $983 in income. These types of opportunities are available right now as we speak. The trade I put on today is available right now as we speak. If you want to see how straightforward these weekly windfalls are with your own eyes, then we'll have a live class like I do every single Monday at 11:30 a.m. Eastern Time. We get together live. Trade is posted by noon on Mondays, and you can target whatever dollar amount you're comfortable with. Understand you're going after roughly 15 to 20% return on risk. Okay, so if you want to risk 1,000, you can make 150 to 200 bucks. You want to risk 5,000, you can make 750 to 1,000 bucks every single week. All right. So when we do this stuff live, I post it in all of my accounts. You can watch over my shoulder, copy and paste, take the exact same trade that I do. Some traders trade smaller, some traders trade larger. That's up to you. That's your dollars and percents, not mine. I know what I'm comfortable with. All right. So today you can claim access to get this live workshop and get started with my weekly windfalls in your own accounts just by subscribing to my most consistent and one of my favorite weekly income services, Waterfall Income. This is one of my first services that I offered here at Prosperity Pub between Daily Profit Play, Waterfall Income. I've said this from the beginning. It still holds true. This is one of my favorite strategies. If I can get anybody introduced to trading options with me, this is one of my favorite ways to do it because it's not super time sensitive. It's not even super price sensitive. So if I could teach you this to start trading options and open up your eyes to, wow, options are incredible. You know exactly what the risk is. You know exactly what the reward is. You know exactly what the probability of profit is. That's a great trade. We know what we're signing up for. So we can eliminate a lot of the uncertainty that right now seems to be all over the markets. What's going to happen with the new Fed chair? I don't know. What's going to happen with, Greenland or Venezuela or Cuba? I don't know. What's going to happen? I don't know. No, nor do you. I'm not trying to figure this stuff out. It's just noise. What I can focus on is my trade, my selection of strategies, and my risk. That is what I can do. Waterfall Income is beautiful for that. Okay? It is the only service that I know that targets these weekly windfalls every single Monday around noon. And with this success rate, silky smooth equity curve, 97+% success rate. Yes, that is on back tested trades, but I would put the same type of track record up. If I could trade it back to 1973, I would, despite the crash in the 1980s, despite the roaring 1990s, despite the crash in 2000, 2001, despite, I would still test this strategy against everything because I know it works. Okay. But in the service, since we started running this last year, in fact, I'd say we technically have over a year of the service. I think it's like 15, 16 months now. 116 live trade wins at a 94+% win rate. Okay. And as I mentioned earlier, if I've got 150 new people that want to jump in today, great. All walks of life, all account sizes. I don't care if you've been investing in years or you're just getting started. I'm happy to be the trader that helps you learn and earn. So just a moment, I'll reveal what ticker we trade and why we do it on Mondays. Here's how it's going to work. Every Monday, 11:30 a.m. we are live. Trades are posted by noon. I verify the data, post a weekly windfall alert in your new members area. That's inside your classroom. There's going to be a little alert section in your classroom every Monday that trade gets posted. I package this up. It goes out through email, notification, and Telegram, as well as inside your classroom, whatever's most convenient for you. Just like what happened back in August, there's my email. Follow along, enter the trade as soon as you see it hit your cell phone. Hit your alerts, go into the classroom. I send it out on Telegram. I talk about it live in my sessions, right? I run these services. I've got hundreds of traders, thousands of traders that follow me each and every week. I'm making sure like we got some touch points. So no excuses on how it's like, I didn't know, Chris. You do. You know that I post a trade every Monday. So once the trade is in, spend the week doing whatever you want to do. And sure enough, you follow along. What could you have seen? On that 5K risk, there's 1406 in income. Not bad. Opportunities like this keep rolling in. There's another win for $980. Okay, almost 2,400 bucks in 2 weeks. Now, maybe that's some money to pay off some debt. Help the kids, help the grandkids. Build your trading account. Enjoy the process. Show you're making some money for the first time in a while. Maybe start planning your next vacation. So I think that these are all great choices to have. And maybe the most important thing is not to constantly worry about having enough money. Money is a huge stressor. It is divided families, and unfortunately, it's some people like just people aren't transparent about it. It's just money, as I say, you can't take it with you. But man, it's nice to know there's ways to make it, and ways to have it sitting around where it makes sure life is a little bit less stressful. It's one thing I really don't have to worry about. If we don't have to worry about finances, and we don't have to worry about health, I think for the most part, we can be pretty happy people. Okay. So if you know me, you know that I like to teach my students how to fish. I'm a big, big believer in I can make money in the markets, so can you. I'll teach you exactly how I'm doing it, right? There's no secrets. It's fully transparent. And I'm in the trenches right alongside you, taking all the live trades with you. So I don't trade demos. I don't. I haven't traded a demo account since like 2007 when I started trading currencies. It's been live capital for 20 plus years. So if you're new to trading options, and I get it that options comes with a bit of a learning curve, it can, but I want to help you level up your skills and I want you to learn and earn faster. So I do have an option trading boot camp. That's a video series to help get you off the ground, get you, all the information to be filled with knowledge, understanding that this is what we're trying to do. This is our trade. This is our strategy. This is what we're doing. This is how far out we go. These are strikes we're selecting. This is the asset we're trading. And if you can follow a broker platform and find your calls or find your puts or put your debits and credits on, if you can find those things, navigate a broker platform, you can place this trade. And if you can't, that's what this option trading bootcamp is for. We also have the Kickstart classes. We do this every single Monday. So it's a combination of a Kickstart class as well as a live trading session. And then I also sprinkle in master classes to go with it. We've had, I'm trying to think since last year, we've probably done 20 master classes together in just the last maybe 6 months. I'm very active with the service because we have more and more members that join me every single week. And you never have to guess how Waterfall Income is performing because we have a trade tracker to go right alongside it. So our trades are in, trades are live exactly with the asset expiration, the strikes we're selecting, the trade setups, pending, orders, fills, closed, everything, and we track it live. Okay. So before I open the doors of Waterfall Income, what really gets me jazzed up about these weekly trades is over the last 11 years with a 97+% success rate. Granted, that is back tested and live. Okay. Live trades, we have about a 94.5% win rate. Still pretty damn good. Consistent results. And I really want you to understand like this Waterfall Income approach stacks results over time. Okay. I'll give you a quick example. This would have been election time 2024. So October, November 2024. I believe that the market, and this is my thoughts, but based on my strategy in Waterfall Income, I was aggressive. I told traders like I'm being aggressive. I'm pretty bullish going into the election. I think that Trump will win. I think the market's going to like it. And we had stacked up. I had 16 open positions. Now I'm not saying that to scare you, right? But what was beautiful about that is the day after the election, when the market gapped higher, I had 16 closes for profit. And my Waterfall Income / weekly windfall ended up generating close to $40,000 in my accounts in a day. Because I was sitting and grinding. They were all looking good for profits, but it's like profit target, profit target, profit target. All took off the next day. And what's even better is I had even a surplus of wins because it actually exceeded our profit targets, which is great. So anyway, you'll never have to guess how it outperforms against the S&P 500. So if we do this, let's say we had $5,000. Again, we did the high yield savings versus the S&P. Let's just take $5,000, throw it in the S&P for the next 10 years. Okay. Now, if you do this in the last decade, we've seen $5,000 the S&P turn into about 27K. That's really freaking good, right? That's great. But I say this because if you use this as risk capital and consider 5K like a starting stake and you put this in the weekly windfalls, if you're going to spend 10 years dedicating your time and energy into the markets, would you rather walk away with $27,000 or $458,000? I think everybody here would like that big, fat $458,000 profit. I would. If I'm going to do this for 10 years, even if it's passive, it's not like this is crazy active strategy. Passive trading. I call this kind of active retirement, actually. Yeah, if I'm going to put 10 years into my time and effort, energy in the markets, I'd much rather have $458,000 to show for it. And that's the type of stuff we have here with the stacked profits week after week after week. It's not compounding. It's just risk and reward. That's it. But it works. Huge profit factor. I know that's a big number. But remember, like I said, it's not about getting rich overnight. This happened over a 10-year period. Okay? So I hope you can see that these opportunities are extremely powerful and they stack up week after week. So we're out earning the S&P by more than 15 times over that same decade, by the way. So the publisher team wanted to charge, this was, great retirement strategy. They've brought all sorts of different promos for it. We started this out a la carte at $34.95. You go to my website, chrispulvertrading.com. You'll see that on the website for $34.95. So it's a bit pricey. Okay. But as one of my favorite retirement strategies, I mean, I'm trading six-figure accounts. If I can make 20, 30, 40, $50,000 a year with the strategy, I mean, 34.95 is teach me. I'll pay for that to learn it, to do it forever, right? So the main website has it $34.95. That's for 1 year of access. That means you can trade with me every single Monday, like clockwork, and do it forever, right? Now, on average, we've earned about $42,000 a year on average with this strategy. And luckily for you here today, it's not $34.95. Okay, bonus number one is a typical win. We're going to celebrate a typical win with the waterfall income strategy. We're going to credit that typical win towards your subscription cost. So over the last 10 plus years, 5K risk averages out to about $1,015 for an average win. Okay, so what we're going to do is we're going to pay that forward to you and knock off not just one win in waterfall income, but two. So we're going to take 2 weeks off your subscription cost. So that's $2,030 in savings. And I just want you to think of this as we'll pay it forward, give you kind of two successful weekly windfall trades. And now the publisher team from $34.95 a la carte, now we've got you down to $14.65. I want to make sure that was right. $14.65 for an entire year. Okay. And again, show up and trade with me every single Monday, like clockwork. Easy peasy. Okay. So I think it's great. Choice is yours. Jump into a program we do every single week. It's not time sensitive. Okay. A very straightforward option strategy that I will teach you from start to finish. All traders, all account sizes, all walks of life, all over the world. We do this together. So if you're ready to take action and join the all-new Waterfall Income, new alerts are in your inbox now. In fact, if you do jump on board inside your classroom, make sure if you check with our team at Prosperity Pub, we'll give you the link and the support number as well. Make sure you get access to today's trade. Okay. So claim your $2,030 in savings and other goodies, plus everything you see on the screen for all the bonuses inside your classroom. So go ahead and click the link in the chat that's coming in right now. Blake just dropped that. Thank you so much. Look, I think that 50 spots, 100 spots, 150 spots. I just crossed over 1,000 members in my daily profit play. We're creeping up on like 800 for waterfall income. We're never going to be too big to move the market. So we could have thousands and thousands of traders in this service as well. All right. So I'd love to see those spots fly off the shelves. And after that, if we get 2,000 traders, 5,000 traders, okay, it's up to my publishing team to decide what to do with the price. But for right now, get that $2,030 in savings, trade with me every single week, and the link is in the chat. Okay, 1465 instant access, new trade each and every week. We have a trade valid right now. I'll get to that question in a second, Troy. So prosperitypub.com/windfall, or if you want to talk to our team directly, give us a call. The trade that's in your classroom alerts right now, make sure you have access to that classroom. Check your alert section to get the trade that I posted today that's been filled, 904-706-3537. Okay, I've instructed the team also to give you an additional best deal discount. So you'll see that in the order form, but give our team a call. Okay, first come, first serve. And again, $34.95 publishing. That's like the a la carte price down to $14.65. And a trade is valid and ready for you today if you want it. Once you secure your Waterfall Income membership today, don't close the next page. Here's why. You'll have a unique invite to upgrade your membership to lifetime, and this means no renewal fees ever again. No renewal fees, no subscription fees, no account fees, no maintenance fees. Lifetime members will get free access to the following: Waterfall Max Profit Training. Okay, what this is this is a way for us to amplify our gains without taking on any additional risk. Okay, so we're going to amplify our gains with no additional risk. So we're looking for bigger gains. So a chance to target even more than $1,000 a week with the same risk profile. So that is a bonus class for my lifetime members. You can unlock gains like this so that, we've talked about, $1,500, $1,200, $1,100. Well, same trade could pay $23.43. Same trade could pay $26.56. Even had windows where, a trade that pays over $2,000 for the standard strategy is paying over $3,000. Cool. Let's see here. $13.65. Good. So it's cheaper. Good. $13.65. Even better. Cool. So anyway, $3,000, $36.90 in extra income. Again, that is max profit training. Cool. That's for lifetime members when you join today. We're not done yet. I'm going to sweeten the deal for lifetime members as well. Bonus number 2. This is one of my favorites. This is where I get into the trenches of advanced trade management. What this allows me to do is basically have a backup plan for my waterfall income. This is teaching you how to have a backup plan with our strategy. And if we want to, it's optional. But if we want to, we have ways to repair our losses. And I did this This would have been December 2024. I took a loss of about $330 and repaired it to over $6,000 winner. So that feels pretty good, right? You lose $300, walk away with $6,000. Yeah, I'd like to teach you that. So that's for VIP members, lifetime members. That is my advanced trade management strategy. Bonus number 3. This is a basically a tweak on frequency where yes, we trade every single week together. But if you'd like to turn the waterfall into a tidal wave, there's a nice way to do that by adding additional trades. So I said we trade every Monday, right? There are going to be days where we trade on Mondays, and let's say 2 weeks later on a Thursday, the market closes out for our win. Our broker closes out. Rather than waiting for Monday to get back together and trade like we typically do, just open up another trade on Thursday. As soon as a winner closes, open up another trade. So if you consistently have like this revolving stack of trades, I mean, again, that's all about dollars and percentages at risk here. Because remember, like there's still risk in the trades, but I don't mind having like 5 or 10 open positions all the time. Okay. And so when one closes off for profit, we stack up and throw another one on, and you can amplify the gain. So if you do this type of strategy where you turn it into more like a tidal wave, then guess what happens? Over that same 10, 11-year study, we doubled our profit. So that $458,000 is now worth almost $1 million. And our win rate went up from 97.1 to over 98%. So again, we don't lose very often. We trade more, we actually make more. So all those bonuses for lifetime members today. Max profit training, that's a tweak of gains, not risk, still same risk profile. Advanced trade management, and turning the waterfall strategy into a tidal wave. Okay, all that for Blake says here, it's a steep discount after you join. How much is lifetime? Yep. Okay, you'll see that on the pages. So if you get the standard and somebody's showing 1365, that's cool. I'm not going to change this presentation. If it's cheaper on the order form, great. You know, I'm glad.
Just okay, so get your little annotation and cross that off and write 1365.
There you go. I'll do that. I'll do that right here, Blake.
You can do it on the last slide.
There we go. 1365.
There you go.
And it looks like I'm 5 years old drawing that.
Hey, better than what I would do.
Yeah. All right. Without a doubt, waterfall income is the most consistent income generating strategy that I've seen. And like I said, this is one of 2 strategies that I run with all my members that every account that I trade gets this strategy. That's how much I like it. That's how much I believe in it. That's how simple it is for me to trade and deploy. And that is really important to me. I mean, like blanket strategy, I can do this in up to 20 plus accounts. I do this every single week. So I think that says a lot because look, I take a lot of pride in my trading. I've been in financial education for over 10 years. I've taught a lot of traders a lot of things, but I'm new to Prosperity Pub. So when I came into the company, I had to basically build my catalog all over again. And I think what traders will quickly realize is this guy's a real trader. This guy trades and grinds every single day. Every trade is live. Every trade is real. So I'm in sister services, top stories here. Here's David. Chris is detailed, very easy to understand. More importantly, the strategy works. It works. Kathy, making $1,000 in average. Somebody here paid for half the membership in the first week. Joining is a no-brainer. Phil, one of my Diamond Club members, making money with Chris. I'm learning heaps from his daily videos. He shows us why the market's doing what it's doing. It really helps my understanding. Excellent tutor. Here's Ken, first month with me, 16 wins, 1 loss, great at coaching, explaining, managing risk, and he does it all live each morning, which I do. And then Kathy here, more excited now more than ever to be, my next career as a trader. Here's Sandy, $10,000 in less than 2 weeks. You're the best I've seen in more than 15 years of trading. That's awesome. I mean, somebody that's been in the markets for 15 years and is finally starting to reach that tipping point where it's like stuff is making sense. Money's being made. You're growing your accounts. You're having fun with the process. I love it. Here's Troy. I've started with other top online gurus and no one can hold a candle to Chris. Very high praise. I know we have great educators here at the company, but I consider myself one of them. And I do take a lot of pride in teaching. I take a lot of pride in making sure that you feel like this is a comprehensive course and strategy that you know and understand thoroughly, and you can do this forever. Okay. So I can't wait to hear from you when you join today. Whether that's 1465 or 1365, or there's lifetime access, and that'll be on the next page. You'll see that as well. But remember, all it is one trade, one ticker, and we do it at the same time each week. Just like what happened in September, there's 980 in income. Following week, 978. What's your first waterfall income trade going to look like? Well, you'll know because there's a trade right now sitting in your classroom with a new trade. Best deal expires soon. So let's go to, this will be like my last slide here, but I've got some FAQs I'd like to go through. we obviously mentioned a lot of trades like, making $1,000, making $1,000. Well, we need 5K to do that. So the question is, do I need $5,000 for these trades? The answer is no. Okay. These trades can actually be very cost effective. They can be dirt cheap. You can have as little as $100 in this trade. That's how much it would require as far as buying power. So it can be very cost effective. I like the idea of, if I'm going to risk 100, I want to make like 20, 30, 40. I also, like I'm doing this time, it's like I'm risking in one of my trades, I'm risking $450 to make 50 to 100. And I also have the potential to make over 1,000. So anyway, I'll teach you that in the class. Oh, what's the ticker? So it's typically anything index related. We have traded SPX, XSP, SPY, QQQ, DIA, NDX. We traded anything that is index related. And we focus primarily on the most liquid tickers in the market. So I do trade a lot of SPX. I do trade SPYs and Qs. I do trade XSP as well for the cash settled, kind of the mini, the micro S&P. But we traded Dow and Russell last year because I felt like those are going to be bullish, and they were. Russell was one of our best performing markets. Like Russell was up, I think, outperforming the S&P and the NASDAQ last year, which is great. Anyway, point is, it's all index related. That is the phenomenon that is built on market cap and the own the haystack. I'm a big believer if you want lower volatility in the markets to grind to higher highs. If we have companies for the most part just doing okay and doing well, the haystack goes up, right? So if you're expressing that in the S&P or the NASDAQ or the Dow or the Russell and the price is going higher, we're going to get paid a lot on waterfall income. Why do we place a trade every Monday at 11:59 a.m.? Here's why. Typically, this is what a Monday looks like. Mondays are usually pretty sideways, choppy churn days. And about 60% of all highs are made on Thursdays and Fridays. So that's on a week-to-week basis. So if we start out like every single week with sideways, and the market tries to get its gears turning and get some traction, and it tries to make highs by Thursday, Friday, if this happens week after week after week, this is why we position on Mondays. I also tested it, right? I tried 9:30 a.m., 9:35 a.m., 10 o'clock, 10:30, 11 o'clock on Mondays, Tuesdays, Wednesdays, Thursdays, Friday. Guess what? They all make money. This strategy is not that sensitive where you can't make money if you trade it on a Thursday versus a Monday. Okay. But as far as my overall edge, I had, the highest profit was on a Monday versus, Tuesday, Wednesday, Thursday, Friday. But the strategy itself, it's great. Can you trade this in an IRA account or 401k? Yes. It is retirement account friendly. This is all about your broker platform and permission to trade options. So I do look after quite a few IRA accounts, and I can trade this stuff every single week. So if you have a broker, whether it's cash or margin, you can take this in a cash or margin account with permission to trade options. If you have any questions on how to get started, join me for a live session on Mondays. Send me an email. I'll share that email here for members, and I'll answer any questions. We do have a 14-day money-back guarantee. Here's what I recommend with that 14-day money-back guarantee. I wish I could push the team to be like, look, man, give me 30 days, give me 60 days. For some reason, we like the 14-day. That way, it's like, look, if you like it, stick with it. If you don't, we'll give your money back, no questions asked. So that's fine. I'm not here to ruffle any feathers or feel like people are seeing one thing and buying something. And I get it. It's your capital, right? It's your investment in yourself. I will say that I'm very proud of the strategy, knowing that this is a strategy that I will be trading until I die. Like, as long as I'm managing my accounts, this is a strategy that's going to be a go-to strategy in my portfolio. So if you get a 14-day test run with it, you want to trade with me forever, that's fine. I think it's worth it. But also in the 14-day window, we will have, masterclass within that 14 days. We'll have a trade that's available today. We'll have a trade available next week, and we'll start getting some trades out there and open. Now, understand that a lot of these trades are open for maybe 20 days, 30 days, 45 days, 60 days even. So do you get a trade to finish, start to finish in 14 days? Probably not. Not with this strategy. This is an index swing-based strategy. But one thing I can win you over with is join me for a class. Join me for a live session. Join me for a masterclass. You'll see, like, holy crap, this strategy is amazing. And you're trading something with an upward bias forever. Okay? All right. Also, our team is supporting you every single day, 10 a.m. Eastern time to 1 p.m. Eastern time, live Q&A, customer service live. Okay. All right. This is my final slide. Now I can officially update this. So I'll take this here, and I believe the order form shows 1365. Yep. And I'll even use a nice font here, Blake, 1390 or 1365.
Oh, there you go.
There we go. So
Oh,
that's better handwriting for everybody.
there you go.
So according to this, the order form that I've seen in the chat, the order form is 1365. Okay. In this course, we have 2 core strategies. I have waterfall strategy 1. I have waterfall strategy 2. I will teach you both of them. There is a big difference between the two. Strategy 1 is extremely simple. Strategy 2, I think it's simple because I teach it and I trade it. So I'll tell you this. If you like the idea that the market can grind higher, you're going to love strategy 1. If you like the idea that the market can grind higher, but you're not quite sure if it's going to now or maybe in the next like 30 days, strategy 2 gives me a margin for error that right now we're banking on anywhere between, look, if the market corrected 5%, we're going to win every strategy 2 trade. If the market corrected 10%, we're going to win every strategy 2 trade. If the market even corrects 15%, we're going to win almost every strategy 2 trade. Okay. So when I'm cautiously bullish, I trade strategy 2. When I think we have better opportunity to be timely, getting like good grinds every single week, then we use strategy 1. But I'm happy to teach them because it's a very distinct, difference between why I make money, with one of the strategies over the other. And also when I'm cautious, I like to, I want some margin for error. I want some wiggle room. I don't want to take on risk at these all-time highs. So we're doing a lot of strategy 2s. That's fine, but I'll teach it. That's the most important thing is I'll teach it. I'll show you, see the difference. And they're great strategies and they're all defined risk. It's all defined risk. So you're never going to place a trade with me that you're risking more than you thought. There's no naked risk here. Like what you put in from the probability, the risk, reward, all that stuff up front is predetermined. So nobody should be taking a trade and feeling like, Chris, I can't believe I took that